Hey, what's up, everybody? Welcome to the session today. We're going to be starting in 12 minutes with uh, Mark Putrino. Mark Putrino, a lot of you guys know Mark from the Benzinga Trading School. Former hedge fund manager, traded with Steve Cohen, Mario Gabelli, two titans, well known in the industry, worldwide, actually, those. But yeah, Mark is in a session right now with the school members. So once the session is over, which should be in about 11 minutes or so, he's going to pop in here with us. We're going to be talking about stocks, trade ideas, education, setups. We're going to be taking tickers as well from the chat. So participate, engage, ask questions. So, it's more fruitful for everybody. We're going to be here 1-2 hours around there, could be longer. And we're going to give a special prize as well. So we're going to be doing a special prize for the folks. And just make sure you're here. 10 minutes, we're going to get everything going. And we have something pretty special planned. So don't miss this. We're going to see you guys in a All right, ladies and gentlemen, welcome. We are going to start here our live session workshop with Mark Putrino, Chief Educator at the Benzinga Trading School. So we're going to get started here in a bit. Just have to go through a couple things here. Shout out to Adolphus, Casey, Gary, what's going on? Dana in the house, Harvey, Jack, Hector, Jerry, Joanne, popping in. What's going on? Good stuff, guys. A lot of friendly faces here. So, everybody, welcome. My name is Rodrigo. I'll be here with you today. And let me know in the chat when you guys are ready to start, so that we can go ahead and just get everything going in the chat on YouTube and on the Zoom call as well, because we have two different chats. Let me know when you guys are ready to start so that we can go ahead and get things going with Mark. Yes, we're going to be talking. We're going to be talking about trade ideas, setups, education, and also mostly how to be able to profitably trade in the bear market that we're in right now. How to hedge and all that stuff. So we're going to be going over all that stuff. Jonathan is ready. Casey's ready. Gary's ready. Let's go, guys. Let's get this started. Without further ado, let's go ahead and bring in the man himself, Mark Putrino. How you doing?
Hey, Rodrigo. How you doing?
I'm doing good, man. I know that this is a great session. I know you got some good things for today. But how was the class today on the school?
It was good. It was good. I mean, there's no lack of things to talk about these days. So it's been going pretty well, though. It's a bad time for the markets. It's a bad time for the world. But as traders, in a lot of ways, we welcome the volatility that's going on. And we've had some really profitable trades over the last week or two. So, there's a lot to talk about. So it's been a pretty fun class this past week here.
Yeah, no, it's definitely fun. And I do like the community aspect of it. The classes are very good. And yeah, there's about 8 chapters. Classes are Monday to Friday. A lot of you guys, some of you guys are students, so shout out to you guys. Let them know how it is in the chat, right? And we got Usman from Nigeria. What's up, brother? All right. Okay, Mark, maybe can you share your screen here really quick?
Yes, sir, will do.
Yeah, I know you have some topics laid out, so yeah, we can go ahead and just get started.
Okay, cool. Just give me 1 second here. So I guess I'll just you can see that good. Everything looks okay. All right. So, well, thanks everybody. I guess the first thing I got to do is introduce myself. So I'm Mark Putrino. I'm the head of the Benzinga Trading School, and I have a good background for this this school because I have a pretty extensive background in institutional trading. So I worked for Steve Cohen and Mary Gabelli. I traded directly for each of these guys, and you might know their names. They're pretty much not only some of the best money managers of today, but they're also some of the best money managers pretty much in the history of money management. So, I spent some time working for these guys, and then I spent some time after them working as the head of trading at 3 different institutional money managers. And in these money managers, we have, I've oversaw all kinds of trading, whether it was value, buy and hold, high frequency, day trading, option trading. So I've been around the block a few times, and I've seen a lot of things. And this is kind of my second career. About 5 or 6 years ago, I left the institutional world and I asked myself, what do I really want to do? I wasn't ready to retire. And one day I was, just kind of looking through things online or whatever, and I saw this ad that was advertising this newsletter. And it was like, oh, the recommendation I gave you last week doubled in money. So I started taking a look at that because I thought like, oh, gee, well, if you could double my money in a week, I definitely want to take a look at it. Right. So as it turns out, it was, a complete fraud. And every stock has a bid and an offer. And there's a stock that was a 1 cent bid and a 2 cent offer. And someone sold and traded at a 1 cent, and 20 minutes later, someone sold and it traded at 2 cents. So on paper, it went up, it doubled in money. But in reality, there's no way you ever could have done anything with that in real life. So there's a lot of really, these complicated and these schools out there that want to sell you these like secret formulas and everything. And that's just not how it really works in the real trading world. In the trading world, we're focused on important levels, important trends, momentum. There's no secret formulas. I know people think that guys like Stevie and Mario have these like secret formulas, but that's just not the way that it works in the real world. So everyone's talking about inflation now, right? Inflation. And I just want to bring you guys up to something here that I wrote about back in August of 2020, right? Look here, inflation rears its ugly head. So people have been talking about this. Well, actually, they haven't been talking about this. They started talking about inflation like 6 months ago, but about, a year and a half ago, I was like, hey, man, and this is something I published at a prior place before Benzinga, there really is inflation going on here. A lot of this came from my views of looking at the copper market here. And it's not like some secret formula or anything like that. I just was looking at a chart as I go through my commodities things. And these are things that we look at pretty much, every day in the trading school, especially now. We're pretty much looking at commodities every day and figuring out how we could make money off of them. So we spend a good part of the day looking at these things. But anyway, so inflation is not new, right? If you were watching the markets over the last few years, you would have seen this. And as trading school students here, this is something that we looked at for a long time. I mean, the trading school just started in September, but I've been talking about inflation going back to August of 2020. So what I'm trying to say here is, it's not, I don't have a secret formula or a secret system, but by just observing what was going on in the markets, it kind of keyed me in. Copper is a bbig indicator of inflation. People follow it very closely because it's used in a lot of different things, housing, cars, electronics, you name it, and copper is in it. So what I'm trying to say here and what I'm trying to point out is by looking at the markets, by looking at the charts, you can get insight into what's actually going on. Now, I want to
and
really
quick here, Mark. So your favorite student, Cypher, in the chat. Hi, Mark. Just want to say hi.
Well, Cypher can sell the class better than I can. So
yeah, so basically he says, Mark knows that I am an advocate of the trading school since he helped improve my trading techniques. I went from someone who kept losing money to someone who loves trading. That's really nice. That's really good to see the impact that you're having on people's trading.
And Cypher is, hello, Cypher. Thanks for tuning in. Cypher is a great student because he helps out other students that are newer. And we have a really, a thing I'm proud of with this community thing, because it's good to have different viewpoints of different things. And Cypher is a good student and has added a lot to the class, and we really appreciate him. And there's some other students too that have done the same. So so it's a place where it's not, the important thing about the Benzinga trading school is this, Rodrigo, and Cypher will tell you. Some people are looking for like a trade of the day, like here's my trade of the day, blah blah blah. Because I got this thing going on, and if it works out, it's great, and people come back and they sign up for a lot of money or whatever. If it doesn't work out, they don't come back. This is not like a trade mill or a trade factory. It's about teaching people how to learn for themselves. And what I want to do here is just kind of go back and show you something which is relevant to today, because we're talking about markets that are going down, and we're talking about, we're the name of this webinar is what to do when the market is going to crash or whatever, how to hedge yourself. Well, guess what? Big parts of the market have already crashed. A lot of the stocks that were big favorites last year, the Pelotons, the Block or the Square, or whatever you want to call it, they have, some of these things are down 60, 70, 80%. That's a crash. So when markets start to fall apart, things go down at different times. Back in the internet bubble in 99 and 2000, the first thing to go down was technology. That was in March. Financials didn't fall until November, right? So things go down at different times. So I just want to show you this going back to March of 2020, because I want to show you how we can find bottoms by looking at levels, or looking in the past for levels that were important, and looking at the momentum. And basically, if things get really oversold or go down a lot, there's a good chance they stop at levels that were support in the past. So if this market that we're in now keeps going down, we're going to have to look for levels that could be support. And, that's one of the things that we're going to do when we look at the actual market. But just, bear with me for a few minutes, because I want to bring you back to March of 2020, when I wrote these things in a prior life and published all this. And I'm not, patting myself on the back or anything like that, or just saying I got this great system. I just want to show you how it doesn't need to be that complicated. So March 13th, 2020, the market is a complete panic. It's a meltdown. No one really knows what's going to happen with COVID. It was really a scary time, right? As horrible as it was, fortunately, it turned out to not be as bad as the worst expectations, but it was still a horrible time. But in the stock market, no one knew what was going on, right? Everyone was freaking out. So March 13th, what I say, well, the market looks ready to rally, which at the time was pretty controversial. And what I did was I looked down at levels that had been support in the past. And back in December of 2018, we had this significant low. It's hard to remember now because it was, seems like an eternity ago. But my thinking was, well, gee, if we get down to a level that was significant support in the past, there might be support again. Now, here we go to March 26th. I just want to show you that we got down to the December 18 lows, and we started to rally. Now, March 25th, the day after the actual low, here's the actual low. This is the 24th. This has the 25th on it, but I think I wrote it on the 24th. But anyway, this was the very bottom of the market. We broke this downtrend, right? Now, what I want to express to you who are listening to me right now is that it doesn't need to be complicated. You can make money in the markets by sticking to simple fundamentals. Right now, we're talking about a downtrend. Well, that's one of our classes. We have 8 classes, and trends are, let me think, I go through this for a second. Trends are the 3rd class. The market was also oversold here. That reverts to momentum. We talk about that in our 4th class. Our 2nd class.
Yeah, and we didn't have the school at that time, right? In March 2020. But this sort of research, right? You share it with the school members, right? Now that we do have the school, all that stuff, you share this type of research because you do have all the stuff that you help them out with, right?
Yeah, it's we look at the markets every day. I don't have any secrets or anything like that. some students kind of seem to like to just chill back and watch. Other students seem to want to get really engaged. And I think that's where the best ideas come from, is this exchange of ideas, because, I've come up with some decent trading ideas since we started the class. And some of the students have come up with ideas that are probably even better than some of the ones I've come up with. But here's the thing. If we just taught it one way, Rodrigo, if it was just like, this is the Mark Putrino method, that's my method. Well, and I don't even have a method. My method is to be flexible. But you have to do what's like right for you. You have to do what fits your personality. For instance, today we were talking about trading models. Some students, and it's not right or wrong, it's just your personality, want to have models that are completely objective, just based on pure mathematics, a moving average crossover. There's no guesswork, so to speak, or subjectivity involved. Other students are, more of a kind of a loose kind of a feel, where things, they use a little bit of judgment. This is support, this is resistance. There's no right way or wrong way. It depends on your personality. And if you're trying to work a system that doesn't fit your personality, you're going to lose, right? And it's like forcing the square peg into the round hole. And that's one of the things that we talk about during lesson 6. We have 8 lessons. Let me just explain the way the lessons work for people that are wondering. So we have 8 lessons. They go Monday through Thursday. We start off on Monday with lesson 1. We go through Thursday with lesson 4. Friday is just kind of an open chat. We don't really have a formal lesson. Monday, we go back to lesson 5. Then we do 6, 7, and 8. And we review the fundamentals of the markets, or what the fundamentals are. Like I just talked about, we have a lesson on how to identify an important level, how to look at something like this, how to know where a market's going to find a bottom. That's a level. Lesson 2, we focus on trends. We focus on the first part of the lesson is maybe say the first half an hour or so at 7 a.m. Eastern time. We talk about the fundamentals. Then what we do is we look into the actual market in real time and see how we can apply these fundamentals to turn them into profits. This isn't like a book where anyone can write a book, because everyone's a genius in hindsight and can say, oh, last year I said that this was going to happen or that was going to happen. But that's not how you really learn. If you really want to learn how to trade, you have to learn how the markets evolve and change, because the fundamentals never change. The things that we talk about in the class, momentum, levels, trends, that doesn't, investment psychology, that doesn't change. But the market changes.
Yeah.
So if we go back to March of 2020, I was able to identify this bottom, which was a major bottom, by really nothing more than looking into the past for an important support level and a trend that had reversed. And that was
that was a great call, Mark.
That was like a really great time to be in. That was the very bottom of the market.
And don't forget also, like the bottom you called on oil at 60. I believe it was in August. We were doing one of these education workshops before, right when the school was going to start, which was a great call, because from there, all the oil stocks rallied huge. And there's a lot of misconception, like you said, that some people think it's super complicated and you have to be doing all these different crazy things, but you're simplifying everything on focusing on what actually matters. I think that's good, because there's a lot of noise out there. There's a lot of TikTok kids and all the stuff. So I think it's good to hear it from someone that's traded with people like Steve Cohen, Mario Gabelli. Like Gabelli's like a $34 billion fund, and Cohen like 25, 27. So these are huge titans in the market. You being able to working with them and trading with them is unbelievable. It's amazing, because the students actually get to hear from you, from somebody that's traded in the big leagues per se. So I've always been, I like my teachers that have actually done it and in real life. Those are the best teachers, So I think that's why it's just great that you have this combination of skill sets and the passion for education.
Yeah, I like doing it, man. It's fun, and it's it's really fun to watch people make money, and it's really even more fun to watch people not lose money in a lot of ways. I don't know if that's kind of a weird way of looking at it, but it's easy. Well, I don't want to say it's easy to make money, but it's much easier to make money if you just worry about the bad things and let the good things take care of themselves, right? That's why we have a trade that's going against us. We try to get out of it really, quickly. But I want to show you guys something about this Tyson Foods. Now, I've been reviewing this a lot for people. If you've saw the, if you've been into the webinar before, you might have, or at least in the last few weeks, might have seen us talking about this. But it was very indicative of what is going on, and it turned into a profitable trade for a bunch of the students, and it was based on nothing more than common sense and logic, right? And experience. There's no secret mathematical formulas going on here. So because of the inflationary environment that we were in, or are in, I should say, I discussed with the students how it's important to watch certain companies and what their earnings are and what's going on in their earnings releases. And one of the big ones that was coming up was Tyson Foods. Now, of course, all big companies' earnings are important. Apple, Microsoft, they all reported a week or two before this. But I kind of focused on this because this thing has a real supply chain, and it's got exposure to all parts of the economy. They raise chickens and sell chickens, so they have exposure to, farming, agriculture, oil, this, that, and the other thing. So I thought it was a pretty good, bellwether, so to speak, to look at. And we really got a lot out of this. And it ultimately is what we're here for. It turned into a profitable trade, but it also gave us a lot of insight that we can use going forward. So the company reported here, right? The day before it closed, way down here, the day it reported its earnings, they had blowout earnings. It closed at $99. Wall Street, all the highly paid investment bank, well, actually not investment bankers, but all the highly paid analysts that follow this company, the general consensus was, they're going to earn about what was it, $1.95 a share. All right. The earnings came in at 287. So it was a blowout. It was well above estimates, which makes you wonder, why are all these analysts getting paid so much if they're so wrong, right? Seems like good work if you can get it, but that's another discussion. We talk about things like that on Fridays, Rodrigo. But anyway,
Yeah,
we had this big blowout, right? But with just a little bit of, looking at the numbers, and we went and we looked at the investor presentation that the company put out, which literally takes maybe 5 minutes to review. The reason why the numbers were so good is because they had to raise their prices so much. So why do they have to raise their prices so much? Because of inflation. Their cost of their inputs had gone up more than anyone on the street thought, right? So they had these blowout earnings on the surface, but as you delve into it a little bit, they weren't so good. So we talked about in the class how there's a good chance we have some kind of a reversion. In other words, something got way ahead of itself for the wrong reason, so to speak. When that happens, there's a chance it reverts back. And that's kind of but that's what we were looking for here. So that was what we call a setup. Now we talk about trading models in the school. That's our class number 8. We talk about different trading models, different trading strategies, everything from, deep value, fundamental, scalping. Pretty much we cover the vast majority of styles. But our setup, and a lot of technical trading models have these parts. They have a setup, which is your get ready, get set. It's like if you're at a race, you go up to the starting line and they're like, get ready, get set. The go is when they say go. That's the trigger. We call that the trigger. That's what you do to actually place the order with your broker. So the setup was this thing was up so high on kind of ridiculous numbers, or numbers that were, good for the wrong reason. When the street figured that out 2 days or 3 days later, of course, we figured it out a day after, but the street, took them 2 or 3 days more. And we said, all right, well, there's a chance we're going to have reversion here. Now, then the next question is, that's our setup. Looks like something's going to revert. Well, what's the trigger? What makes us actually make the trade? What tells us this reversion we're expecting is in motion? And in this case, we said if it breaks down, going back through the 97.80 level, there's a chance it's going to keep going lower. Now, we didn't just pull that number out of the air. We looked at 97.80 because in the short term, it was an important level. It's where the stock closed on this day, pretty much where it closed on this day, the low trade on this day. So we thought about, this thing was overbought. There's a chance it's going to reverse. Sure enough, it did, and it worked out. So I think this is kind of a cool trade, or a good way to talk about what we do in the trading school, because it encompasses a lot of different things. We talk about, right, lesson number 1, philosophy. It doesn't need to be that complicated. We're not doing higher mathematics here, or regression, or astrology. It's common sense. It's levels, trends, momentum. Lesson number 2 is we talk about levels. Why was there resistance at $100? There's no logical reason for there to be resistance at $100 from a fundamental or mathematical point of view. The reason why there was resistance at $100 is because it's what we call a psychological level. People like to buy or sell at levels that are nice and round, right? Whether you're a beginner, a professional, very few people say, oh, gee, sell it if it gets to 97.84. They say sell it at 100. So we hit resistance right at 100. We also got to our target at what? An important level. Well, another thing we talk about in our levels class number 2, is how a level that was resistance can turn into support. This is because of seller's remorse. People here sold. They thought they were, market gurus when the stock went lower, but when it blasted off, a lot of them regret selling and they want to buy it back. But they don't want to pay a higher price than they sold at. So they put their buy orders where they sold it. So there are times where resistance turns into support. So levels, trends, downtrend, or uptrend, it got overbought. So this particular trade here shows a lot of the aspects about what we do in the trading school, because it shows how, there's flexibility. Let me say one thing, and then I think Rodrigo has a few things to say, especially for the people that are listening now that are more mathematically inclined, right? I think a lot of people think that trading is chess. I use this analogy a lot, because in chess versus poker, because in chess, the rules are always the same. The market always moves, or, the bishop always moves the same way. The knight always moves the same way. That's math. The market is not like that. The market's more like poker. It's a skill, but the game changes every day because people's emotions change every day. The person who you're playing poker with, who knows? Maybe one day they're in a bad mood and the next day they're in a good mood. Maybe they just got I don't know. Maybe they just got a registered letter from the IRS that they owe money. So now they're going to be really eager to sell. The rules of how you play poker don't change, but the game changes. And because there's a human on the other side, right? And when we're in the market, there's always a human on the other side. So since the beginning of trading, which who the heck knows when it started, I don't know, 5,000-10,000 years ago, I think people have been trying to figure out a mathematical way to solve this puzzle. And if you try to do that, you're basically going to spend the rest of your life driving yourself crazy. You have to understand that there's humans. This is human psychology here, right? What do I mean by that? Human psychology, humans like to sell at nice round levels. That's why there's resistance at 100. Human psychology, humans sell things, they go higher, they have seller's remorse. Sold, remorseful sellers trying to buy things back. So we stick to these basic fundamentals, Rodrigo, in the class, and the class recycles, right? We go from 1 to 8 and then we start again. And we review the fundamentals, but then we apply them to the market. So now that we've been in the class here since the very end of September, the students that have been with us since then have seen a lot of different things.
Right. No, absolutely. And I'm getting a bunch of emails here, people asking about the school and how to join. So I'm just going to go over these really quick, Mark. There's a special that we're doing just for tonight, $7.97 for the first month. Then it's $147 every month afterwards. So this is only for tonight, guys. Yes, and there basically you get access to everything: Benzinga Pro, the school, the sessions, 7-day money back guarantee, guys, and you also get Mark's trade ideas. So you will have access to the recordings, Pro, all the scanners. As we put more and more tools out, you guys will get that. So all Q&A sessions, office hours, and anything else that you want to add there, Mark?
Yeah, I mean, it's every day we look at the news. Like, for instance, today we spent a lot of time talking about the CPI. So it's an evolving thing. So today, we're the big number was the CPI, and there's resources that we look at that are really, really great, that can really help us get a lot of insight. And let me just show you one, just to kind of, it's easier to, I guess, to show you than to explain it, right? So this is the Bureau of Labor Statistics, and this is it's a free website. It's a government website, BLS. BLS.gov. And like today, right, the CPI came out, and you can get a lot of insight by looking at this. So let's just take a look at the charts, for example. And again, it's a free website. The good thing about this is that there's no bias. It's just statistics. And by looking at some of these websites, we can get some really good insight into what's going on in the economy. And some people really like doing this. So this just kind of gives you a show of what today's CPI number was. And we could see, most of it came from this big move higher in energy, and we had food. And then if you click on energy, you can see that energy commodities were up. So there's this. There's another website that we like to look at that's also a free website, which is from this ISM Institute, the Institute for Supply Management. Now, one of the ways we get insight onto whether there's inflation going on or what the inflation thing was, and one of the reasons why it doesn't surprise us in the class how there is this inflation that's seemingly now starting to come in ahead of estimates or whatever. We had an insight that was coming in, and this is something we review when it comes out. These all come out once a month. So basically, these are surveys of these industries. And I just want to show this because it gives good insight into what's going on. And again, this is not some, quasi expert or so-called expert on TV or whatever, or in social media. This gives insight into what is really going on in all these different industries. And again, this is not biased. This is opinions. So the next one is coming out within the next few days. So we're definitely going to go through it, but you can get insight on this. And you know what? Never mind what the politicians are saying. Never mind what, the gurus are saying. Just by looking at this simple free report, you can get some insight. Now, if you read this stuff, this is, February. I'm sorry. This is February's report. So this stuff is from January, but, we're going to review the one from February when it comes out. But, just look at this stuff. Would this tell you inflation is going to break anytime soon? These are quotes from, CEOs, CFOs, leaders in these different industries here. So someone from computer and electronic products, electronic supply chain is still a mess. Business strong, facing logistics and raw material supply chain issues with some products. We expecting a year of strong demand, higher prices, supply chain challenges. A year of strong demand. Now, I don't know who this is, some, CEO in the textile mills industry, but from, there's these free resources out there that can really give us good insight. So I don't think anyone in the class was really surprised that the inflation is all of a sudden become this big deal, because it's actually been a big deal for a while, but it's only recently that it was recognized. And like I said, I showed you back how in August of 20, I was talking about how, copper prices were going higher. So I want to show you this chart here, and this is going to kind of, frighten you, I guess. But before I go more into this, I want to say too that in the class, we don't just talk about here's inflation, oh, this shows inflation, that shows inflation. It's how do we hedge ourselves? What do we do? To be perfectly honest with you, these have been very profitable times for certain traders. All right. If you're just in the stock market, or if you're just focused on the headlines, you might find that surprising. But what I want to do here is I'm going to bring up the S&P 500. I'm actually going to bring up the SPY, which is follows the S&P 500, which is a broad benchmark. And we look at this every day, and we have students that trade this every day. And we can go through this, Rodrigo, before we're done tonight, if people would like to, and I think they probably will, and they probably should, because there's a lot going on. But anyway, now let's look at this, right? Say you're a stock trader, and just say you bought the stock market, just in general, passive investing, you bought the S&P. At the beginning of the year, right, as we come into the year here, SPY is at 480. Which means the S&P 500 was at 4,800. Now SPY is down to 425. So we've gone from 480 to 425, and that is a loss of approximately, according to my old calculator here, that probably costs about 20 cents. That's at a loss of 11%. So if you just bought the stock market, you got broad exposure to the stock market, you're down 11%. Okay, now let's go back to our CRB index, and let's go year to date. So we came into the year at 233, and now we're at 291. Okay, so if you bought a basket of commodities or a commodities-based ETF, and a lot of the students have bought DBC, and it's given back some over the last few days with the reversal in oil, but it's still up for the year. So commodities are up 25%. So, inflation is a real thing. It's bad. It sucks for everyone, but there are ways to hedge yourself and potentially even profit from it by using things like these ETFs here. And now we're going into, let's talking about, is the market going to continue to go lower? My guess is yes, it is. And you might be saying, well, is this because of Ukraine and blah, blah? I think this market would still, the market would still be going down regardless of what's going on with Ukraine. The market started to sell off at the very beginning of January. It's not something that's just happened in the last week or two here. So in the class, there are things we talk about, and one of them, which is our probably class 7, where we talk about the broad markets and different ways to hedge or protect ourselves. So if inflation is going to go up, this is going to keep going up. If inflation keeps going up, stock markets are going to go lower. And I know Rodrigo's got a couple of questions to take, but after that, we can talk about how to profit if markets ultimately go lower. And I think they're going to.
Yeah, and I just wanted to say really quick here. So we're going to have guys, Benzinga, we're doing like a FinTwit conference in Vegas, and Mark is going to be there as well. So I just wanted to let you guys know that I will be giving away a free ticket to the event. For those that joined the school today, I will be giving you guys a free, I will pick, one person will get pretty much, the, like the actual ticket with like in the conference to go to the conference, if that makes sense, Mark. So just want to let you guys know that for those that do join, right? We'll be emailing the winner of this, but only the people that joined today will participate.
And I think we have to, tell people once again, Rodrigo, that, what happens in Vegas stays in Vegas. So let's keep that in mind, right, everybody?
So that so people can get to, some people can go and meet you in person, things like that. It's going to be cool. But yeah, man. So definitely we've gone through, quite some things here, Mark, and someone's asking, is this what you typically do like on like a regular trading, like on a regular day for a trading school? So walk me through, like I'm a 5-year-old, walk me through the trading school. What do you do there? From the morning, do you gather with the troops there early? What's the schedule?
All right. Well, the first thing we're going to do is, and there's always a little bit of flexibility depending on what's going on. But the first thing we do is we talk about the principles. Like, for example, say it's today was trading models, so that's a little more complicated. But let's say it was our level on lesson on levels, and we talk about how in the market there are certain price levels that are more important than others, and we have support levels, we have resistance levels. Some levels can stay important for a long time. So the lesson would be, all right, let's talk about what's a support level. Well, a support level is a level where there is more than enough supply to satisfy all of the demands. Now let's think about this for a second, right? Why would a market go higher? And not just the stock market, any market, real estate, shoes, whatever you want to buy. Why would, if you're into, comic books, coin collecting, anything, why would a market go higher? Well, there's not enough supply to satisfy all of the demands. So if you're down here and you want to buy CVS, now we're back in June of 15, and you want to buy CVS, there's just not enough to fill your order at current levels. So what you have to do is you have to maybe bid a premium, offer to pay the sellers a little bit more than the current levels to entice sellers to come in off the sidelines. That makes markets go higher. A market rally is when there's not enough supply to fulfill all of the demand. Now, when a market gets to a place where there's enough sellers, where all of a sudden sellers say, hey, this thing's up, man, time for me to sell. When all of a sudden there's enough supply to satisfy all the demands, the market stops going higher. And this is what we call a resistance level. So we talk about how resistance levels form, why resistance levels form, or potentially, and then we look in the real market. And one of the things about understanding where these important levels are is it helps you understand where stocks are going to turn. And that's kind of what we're here for, right? Because that's where the money comes, when you can identify when something is going to turn. Now look at this, right? I could tell you, hey man, markets have memory. Sometimes levels are important for 5 years, 10 years. And you probably say, well, that seems kind of bizarre. I don't know if I believe it. Well, here's CVS, right? And check this out. July of 15. So we're talking about, coming up on 7 years ago, stalls out at 110. Company reports blowout numbers. Where does it stall out? 110. Same level as back then. And, levels are important. And just to give you another example, actually, you can see a bunch here on CVS. Remember, we're looking at a 5-year chart here. But the students, Rodrigo, are, now that they're getting a little more, experienced, as ones that have been around, I asked them, like, hey, look at this chart. What do you see? And some of, they're starting to see, all right, well, hey, here's a clear level, 82. And it's, it doesn't happen overnight. It takes some experience and some time. So this is lesson two.
I mean, if you think about it, Mark, everything that like you would consider, because I mean, trading and this is a full-time, like this is a career we're talking about. It's not like, we're throwing dices on the road or something. So definitely having a background on it helps. So because here's the thing, like when you're trying to like play tennis, like, you get a coach. When you're trying to learn something, you go to a school or a class with an instructor, right? So the whole winging it just doesn't, it just doesn't hold water anymore, not in these markets. And we were talking about that earlier, that in 2020 everybody was making money, and then all these people, all these new traders that came in have been taking painful losses because everything doesn't go up all the time. And that is when you needed the education, and that's really when you had to know how to react to those situations, because have you had the education at that moment, you would have definitely taken a different type of trade. Or and that's happening a lot with the people that got into the market in 2020, COVID, which was a lot. They're all trying to find education. Sometimes you try to wing it and you watch a YouTube video here, and you think you know it all, and then the market just always does that reality check on you, right? So I think it's good that you have the immediate feedback of students. You have a live chat when you're doing the video sessions with them, correct? So it's a back and forth. That helps the immediate feedback. It's just super.
So, all right, so let's go back to, we're talking about levels here, and I showed you guys before how when we can identify these levels that were important, it can give us insight into where the market may, find a bottom, or if it was going up, find a top. But I think it's important to, here's an important point I want to bring up, right? We're talking about hedging for a potential market crash. Well, a lot of the market has crashed already, and markets don't just crash on a single day. I mean, yeah, I guess they do maybe in 1987 or 29. But in my experience, if we go back to the internet bubble of 2000, the internet stocks peaked in March and went into a free fall. The financials were the last ones to go down. They peaked in November, so fully 6 months later. So, I assume some of our students here are potential students, and hopefully you guys will be students. I think now's a great time to join, because eventually this sell-off is going to come to an end, and then it's going to be like March of 20, where it's going to be like the buy of, maybe not the century, right, but maybe of like of a 3 or 4 year period. It's going to come. And is it next month, Rodrigo? Is it in 2 years? I don't know, but it's coming. But let's
And you
just
want
look
to be
at,
ready. When that happens, you want to be
yeah,
ready.
we'll
You don't
know
want
it
to
when it's
scramble.
happening. Just like we knew that this top was happening, a month or two ago. And it's not like rocket science or genius. It's just like we watch it. We've been talking about this in the class for a while. Like, let me just throw up some of these random Reddit stocks or meme stocks. I don't know, like for instance, let's just take a look at these. BlackBerry. That was a big name a year ago. Let's just look at, let me just clean this up here. All right, I'm going to go to a 1-year chart. All right, so, BlackBerry, this thing, well, in early last year, January, was at 28. Now it's at 650. To me, that's a crash. They say a bear market is down 20%. To me, that's a crash, right? I'm just going to randomly, I wrote a list here
Oh yeah,
of the ones that
just
were popular. I didn't look at the charts, but
PayPal it's unbelievable. You've seen PayPal, right? Like how that company has
yeah,
totally crashed.
yeah. I mean, this is a crash, right? This is not a bear market, especially if you own it. I mean, I don't want to try to sound like a wise ass, but if you bought the stock at 300 and now it's at 100, that's a crash. You're down 66%. I want to show you, though, here's a good example of how, in the class, there's no guarantee, but there's a good chance we would have, thought there was a good time to sell up here. Now, why? All right, let me show you why. Because like I said, in the class 2, levels, back in February last year, PayPal reached resistance right up around here, around 310. Now, at the time, it would have been hard to tell it was resistance. We could have told it was really overbought. Overbought is momentum. That's class number 4. Momentum refers to how far something has moved in a given period of time. Every stock or market has a little, it's like its average range. If something gets really far above that, we call it overbought. If something gets really far below that, we call that oversold. Now, why is that important? Well, it's important because when things get overbought or oversold, they tend to reverse. So PayPal made a peak here. Now, let's pretend this was July. What happened here? PayPal got to a level that was resistance in the past. It was overbought. So now we have lesson 2, right? Important levels. Lesson 4, momentum. And then lesson 3, we talk about trends. And what do we see here? It broke its uptrend. So overbought stocks that get to resistance tend to sell off. And one of the ways we know that this reversal is going to happen is when it breaks a trend line. So, hindsight is 2020. And I'm not going to say that, hey, man, if you were signed up for the class back then, I mean, the class didn't even exist back then, but we would have seen this, but there's probably a good chance that we would have. So now it's down, 66% from then. A lot of these other ones, Spice, right? It's Virgin Atlantic. This was another Reddit, superstar. Oh, and actually, I think I wrote about this in the on the Benzinga Newswire before the school started. Levels. What do we see here? You don't need to be a chart guru to recognize this, right? Stock got to 57.50. It reversed. This was in February. Then come June, guess what happens? It gets up to 57.50. Same exact level. And what happened? It found resistance again. What happened here? Overbought. So just by focusing on these simple fundamentals that we talk about in the class, we can identify these, low risk trading opportunities. And that's what I like to think is low risk. We want to have a defensive mindset when we go into this stuff. Now, we don't want to think a lot of times like, what can we make? But, if worst case scenario happens, what can we lose? But now this is a crash, right? 60 to 7, this thing is down almost 90%. So that's a crash. Let me just throw up I hope I'm not hitting any, people don't own any of these, but I just want to explain that this crash has been going on and this crash has been happening for a while. And it's what we could call a stealth crash. Now, what's the last thing to go in really, big tops? Well, the good stocks, the companies that actually make money, unlike a lot of the, those stocks we just looked at. We got to start looking now at the big stocks, these stocks that make money. So here's Apple. Look at this level. You want to talk about an important level. This is 157. So resistance became support, support, support. If this level here breaks, if Apple breaks this 157 support, I think there's a good chance that we make a significant move lower. And, we're starting to get into an official bear market now. We get fear and then we get capitulation. And I don't know if the capitulation is going to be in a month or 2 months or in a year, but it will be another buying opportunity like March of 20 was, where, we have stocks that are 5-10 times since that. I don't know when it's going to happen, but I think there's a good chance that when it does, we're going to see what's going on there. So I think that's one of the, probably the best reason to join the class, Rodrigo, right? Because we want to know when that turn is happening, because something like that is a trading opportunity that'll come along once, every 2 years, 3 years, 5 years, who knows? It'll, put it this way, it'll be a trade you remember for the rest of your life.
So basically it's like whenever the 2020 crash happened, everybody was trying to scramble, including myself, scrambling, right, to get into, to really, learn and trade and all that stuff, right? And really at that point, it would have been very beneficial to already have done that before, so that I could take advantage of that opportunity, because like you said, we don't know when we're going to get, the buying opportunity. So whenever you get it, you need to recognize it and take advantage of it. And but for that, you do need, some education. I mean, you're doing the classes, you're Monday to Friday there. So I promise you that by the end of that whole year, like the subscription, if you do it for a year, like that should definitely make an impact in your trading. And you've seen results in people in months only, right? And people,
a lot of students that were having problems are just basic fundamental things that they were missing, like how to have a setup, how to have a trigger. Some students know that, but their problems are a little bit more, I guess, for lack of a better term, a little more like deep or complicated, psychological. Like some people have a gambler's persona where they're, what we call that in trading is like a high tolerance for risk. Some people don't mind buying an option and say putting $1,000 into a position, knowing that they could completely lose it all. But if things work out, they could make 5,000. Other students, they don't want to worry about that. They don't have the high risk tolerance. They have a different mindset. They've been wired a different way. There's, it's like, there's no right or wrong way. Everyone is different. You just have to do what fits your mindset. So there are some students that don't want to, take those big swings where they could potentially lose $1,000. They want to be more conservative. That's why this is the Benzinga trading school. It's not the Benzinga. This is how Mark Putrino trades trading school. This is the Benzinga trading school, which is open to, all styles, all levels of experience. The only prerequisite for this class is that you have to want to learn. It's not a trading mill where it's like show up and here's the trade of the day type thing.
Yeah. So one of the classes that you do there is investment psychology. And for those that don't know, that is my favorite class. Like the brain is like the most, like the unknown organ, like the one that we know the least about. And applying it in trading is something that doesn't get discussed often, I think. And but what are some insights that you can give us on that class, and really both, the scenarios that you see in students, right? In the
Well, I'll say this, and I think this kind of speaks for itself. I, spent some time working for Stevie Cohen, one of the, it was a real honor to work for the guy. I don't even know if he remembers my name, but I mean, he probably does. I'm just, kidding. But, we're talking about one of the greatest traders in the history of, trading. And for those of you who are students, like, know that, my wife a few months ago fell on the stairs and broke her foot. And, I've been bringing her to the hospital and physical rehab. And it's like, everywhere you go, it's like the Stephen Alexandria center, this Alexandria, so, this guy's giving back billions of dollars to the community. But anyway, he's one of the greatest traders ever. Now, when I worked there, I believe it was only the second interview that he ever gave. And this was, before he was a household name, and it was the Wall Street Journal. And of course, we all listened in to what he was saying, and I was trading directly for him. So I literally wore headphones and he would talk to me on a microphone. But the person who was interviewing him kept trying to say, like, or ask, like, well, do you use this? Do you use a moving average system? Do you use that? Do you trade breakouts? And he kept saying, like, over and over, like, dude, I'm trying to tell you, it's not about that. There are a lot of systems that work. The hard thing is the investment psychology. It's, staying with your system. Now, systems are like gyms, okay? They're great if you use them, but if you don't use them, it's not going to, work. You could have the greatest home gym in the history of home gyms, right? It's not going to put you in shape unless you actually get in there and use it. Now, why do I say that? Because a lot of proponents of trade, or, trading teachers are proponents of, you should paper trade until the cows come home. Get your system to where it's like you've developed the perfect system. I completely disagree with that. Paper trading is easy. It's easy to come up with a system on paper where, you can have a moving average crossover system, or you could have, I don't know, let's just slap an indicator on here. Relative strength index, right? You could have a system where it's like, all right, well, if RSI gets to here, I'm going to sell, which was there. If it gets to here, I'm going to buy, which was here. On paper, that system looks great. But here's the thing. In my 25 years on Wall Street, I never saw a bad paper trading system. Trading systems are easy to develop, but the hard thing is sticking to them. Like the gym, if you don't go to the gym, it's not going to work. If you don't stick to your trading system, it's not going to work. And that's where we get into our emotions. And that's where we get into our investment psychology. If someone was to ask me, if I could say in one sentence what the secret of trading is this, well, you have to use a derivative of that or this, that. No, I'm not going to say that. This is the secret, is understanding that as human beings, we have not evolved in a way that is conducive to trading. When you have real money on the line, everything changes. It's easy to have a paper trading system where you say, okay, all right, well, hey, man, my system said buy Apple if it broke above this level. I bought it at 157. My trading system says, all right, if it gets to 180, sell it. Hey, great. I just made this profit of, $23. Great. I'm a great trader. I could be the next Stevie Cohen, blah, 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 blah. Now, let's just pretend you actually put money into this. And I don't know, say you bought 100 shares and you got 15 grand here on the line, right? And it gets up to 16. Now you've made $1,000. Well, that $1,000 seems pretty darn tempting, doesn't it? You know, maybe you could sell, have a nice weekend with your significant other, your spouse or your wife or your husband, or, $1,000 is $1,000, man. It sounds pretty good. I made $1,000 in just a few days here. And then you sell it and it keeps going higher, right? Then you start saying, well, gee, if I had some discipline, I would have made $5,000, or whatever, So paper trading is easy. The real secret to trading is the whole emotional game. And it's not easy, but that's the secret. It's easy to come up with these systems. It's easy to come up with a workout. Like I could easily say to myself, you know what? I'm going to get up. I'm going to run 10 miles. I'm going to do some push-ups. Then I'm going to do some pull-ups. Then I'm going to get my sledgehammer and, go hit some, tires. Yeah, if I did that, I'd be in pretty sick shape in a few months, right? Just like if you had a trading system that was really good and you stuck to it, you make a lot of money. But the trouble is people cannot stick to it because the emotions get involved. And now, if you don't think you're susceptible emotions, I can tell you that you're probably wrong, because every human being is to a certain extent. The difference between the successful people and the people that aren't is the people that are successful not necessarily have this ironclad discipline of, like Arnold Schwarzenegger working out 6 hours a day. I think a big part of it is just understanding that a self-awareness, saying to yourself, it's like, dude, you know what? You're about to make a big trade where you're putting a lot of money on the line. Is it really going to, make a big difference if you say to yourself, you know what? I'm going to go for a walk for 5 minutes. I'm going to think to myself, why am I putting this trade in? Am I putting this trade in for a logical reason? Did it get to support? Is it oversold? Did it break an uptrend? Or, I saw something on a chat room and I'm bored and, blah, 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 or I want to make up for the loss I made yesterday. So I'm not saying you got to be a master of your emotions to be successful, but I think you do need to have an awareness of how your emotions can make you make mistakes. All right. We're all susceptible as humans to these things. Now think about this. You want to think about herd behavior. Okay. Like we just had the Super Bowl. Now we're going into March Madness. And I hope I can stay up because my team is playing at 9:30 tonight. So that's another 3.5 hours, Rodrigo. But say you're a Cincinnati's Bengals fan and it's right before the Super Bowl and you're in some restaurant somewhere and you're wearing a Cincinnati Bengals jersey and someone else comes in and they're wearing a Cincinnati's Bengals jersey. People tend to feel like this natural affiliation for each other, like a bond, right? They don't even know each other. They could be, one of them could be an axe murderer, but that's that herd instinct, right? Religion, politics, music, sports, fashion. Why do people think suits look nice? If we still have a civilization in 3,000 years and they look back and say, man, these people used to think suits look nice. It's like we look back on, the Romans that wore togas, or primitive man wore, I'm sure primitive man 20,000 years ago thought like, oh, gee, that's a nice, deer pelt you're wearing there over your shoulder, But why did that, primitive man, Cro-Magnon or whatever, think like, oh, that's a nice deer skin you have wrapped over your shoulder? Well, why do people think, hey, that suit this guy is wearing on television is nice? It's herd mentality, right? It's herd behavior. If you were, if I came to an interview or went to a meeting wearing just nothing but a deer skin sloped over my shoulder, I probably wouldn't make it past the security guard. But there was a time in our, civilization where people thought that looked nice. just like now suits, right? And this herd mentality sucks people into doing things that are dumb. And it could be as easy as, all right, you're driving down the highway and you come to a toll booth and there's 10 tolls and everyone's going into one. So you get online and then all of a sudden you realize, oh, gee, that one over there is open too, but no one's going through it. So I'm going to get off this line and go drive through that and save myself a half an hour. And then as you drive through, everyone else you see is coming behind you. Now we're talking about getting home later than usual. But when it comes to the stock market, this herd mentality can make you make really dumb mistakes. So that's why we spend a lot of time talking about psychology in the class, Rodrigo. And I think that, that's one of the important things, or that's one of the things that people are successful eventually come to that, and they find that, and they realize this is the secret. And I think with the class, we want to make people learn that way before they would have, way before they would have, had they not taken the class. So,
yeah, that's the thing. You don't really find that sort of information out there, like, to learn about investment psychology. I think it's just something that I don't think is covered often, and the fact that, the class, you're able to pinpoint these things. It's like, you're their therapist now. So,
well, we give dating advice, movie reviews, we do a lot of things in the class. We have a good time. One of our students, I don't know if she's here tonight, but I thought she said really good things. She's like, we learn and we have fun doing it. We got some characters, but let's go back to, our original point here about if the market's going to go lower. Now, everyone bear with me. Give me like a few minutes to just kind of go through the markets here. Now, I think the market is going to go lower. I'm not talking about maybe tomorrow or, Tuesday. In general, we have these big inflation things going on. Now, something I want to point out is that this is our CRB index. We looked at this before, inflation year to date or whatever. The numbers that came out on the on the CPI today, which were higher than VOT, or higher than estimates for inflation, was the numbers from February. I'm here marking off February. All right. This inflation report was bad. Next month is going to be really, really like super double bad, if that's even a term. Super double probation. If anyone remembers that from Animal House. But the numbers that we saw reflect the CRB of this. They don't capture this. This is March 1st. Look at this spike we've had because of oil, because of wheat. And, there's huge ramifications to what's going on. Everyone's focused on oil, but what about wheat? What about the fact that Northern Africa feeds themselves with wheat, and now most of the people there can't afford to buy wheat anymore? We're looking at potential famines and so forth. So things are pretty messed up. But that's why I'm bearish on the markets. Now, I want to give you guys a few things to focus on here. And, I hope you join the class. I hope you at least give it a try. I think you'll, be happy. And if you're not, it's like, then I think that
I forgot to mention there's a 7-day money back guarantee as well. So you can literally try risk free.
Yeah. So, give it a try. I think you'll be happy. And if not, you get your money back or whatever. But now let's look at this, right? We talk about levels. We're always going back to levels, this, levels that. Price levels are important. I just showed you guys how a bunch of all this, the garbage stocks. I don't want to, garbage for, this is not a garbage stock. This was a meme stock, but I don't know. I guess I'll just like Upstart. when the market starts to go down, the bad stocks, meaning the stocks that companies that don't make money, go first. But there's going to be a big signal here from Apple. And if Apple breaks this important level, there's a good chance the market is going to continue to go lower. So now let's talk about, all right, Mark, you're great, blah, 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 blah. So what the heck am I supposed to do? Now, if you're an option trader, you can buy puts, but a couple things that I would like to point out for people that are not necessarily option traders, people that want to, maybe get a little bit of a hedge or maybe even profit from it. There are ways that you can do that, which are not really that sophisticated, which are great tools. Like 50 years ago, 60 years ago, they didn't have these ETFs. So now we have what we call inverse ETFs. You don't really need to think that deeply into what's going on behind the scenes. How does this work? I mean, we can talk about it if you want. It has to do with derivative strategies, this, that, and the other thing. But if you think the market's going to go down and you buy this SH, it's just like buying a regular stock. You don't need to worry about the complexities behind the scenes. You don't need to worry about the taxes other than you would a regular stock. But if you think the market is going to go down, and what has happened since the beginning of the year, the stock market has gone down. Notice how this ETF, SH, the Pro Share Short S&P 500, has gone up. This ETF is designed to go inversely to the market. So if the market is going down and everyone, all your friends are like, oh, I lost all this money in the market. Had you invested in this inverse ETF, your portfolio would be going up. There are ways to not only hedge yourself, like we saw with inflation, but to profit from it. There are ways that you can hedge yourself or even profit from a market going down. We don't want the market to go down. We don't want that, but it happens. We can't control the market. If this was 50, 60, 70 years ago and you were an investor and you thought the market was going to go down, there really, other than going into cash, there wasn't much you can do. But now we have what we call, or not what we call, but what are inverse ETFs. This ETF, SH, is designed to do the opposite of what the S&P does. So if the S&P is down, 20% year to date, this thing should be up 20% year to date. So we can even take this a step farther, right? Inverse ETF. We can go to what we call a leveraged ETF. Let's just take a look at this one, the ProShares Ultra Short. This is designed to move, I believe, twice inversely to what the S&P does. So let me just confirm that. So today the S&P was down 45 basis points. So let's look at SDS. So this should be up about 90 basis points. All right, and we can see today it was up 97 basis points. So this is what we could call kind of like a double whammy here. You have to be right, obviously, because if you're wrong, you're going to lose money twice as fast as you can make it. But what I just want to emphasize to everyone who's listening, and this is something we talk about in the class, and if you want to learn more, let Rodrigo know so we can get you in there for a trial. But, we don't want down markets, but we don't really need to be afraid of them, because there are ways that not only can we hedge ourselves, we can profit. So let's take this to the next step, right? Even farther along the line down here. Let's look at this. This is a very popular leveraged ETF. This is the ProShares. Not that I care. I'm not advertising ProShares or anything like that. I'm just pointing this out because it's popular. SQQs. This is 3 times inverse of what the Qs does, the NASDAQ 100. 3 times. So if the NASDAQ 100 goes down 2%, this thing is going to be up 6%. So look at this. This year, we've gone from 28 to, 50. So we're talking about like, almost a double here. So, like if you had the market right and had the timing right, and I think we have in the school a lot, there are people that have stock portfolios that are looking at them like, man, dude, I'm down so much. Someone that was invested in this like could have almost doubled their money. And be like, oh, what the hell are you talking about? I've almost doubled my money. Now I'm not saying that, we have this perfect record or anything like that. But what I'm just putting out there is for students and potential students is that there are tools that you can use in pretty much any type of market to gain an edge or to profit. So one of the more simple things is these inverse ETFs. They trade just like regular stocks. The stuff that's going on underneath the hood is incredibly complicated. Derivatives, options, but you don't need to worry about that. For you, it's just like buying a regular stock. It's just got the symbol of S triple Qs. So if the markets start to go lower, this will continue to go higher. So that's why we call this the Benzinga trading school, because there are different ways to trade. There are different philosophies. There are different methods. None is better than the other. It all depends on your particular personality. Like I like to look at, I think this is a pretty good analogy, right? And I think Rodrigo, I'm pretty good with my analogies. At least, I might carry.
Yeah, you are
Not
the
only
king of
do I teach
analogies,
trading,
dude.
I teach analogies. But here's my analogy with like a particular indicator or a particular trading system, right? This indicator is like, it's like a guitar, right? Here's a guitar. Now, how are you going to play your guitar? Are you going to be a blues guitarist? B.B. King, Stevie Ray Vaughan. You're going to be a classical guitarist? Andre Segovia, Julian Bream. Are you going to be a flamenco guitarist? Or are you going to be a jazz guitarist? There's no right or wrong way to do it. You just need to adapt it to a way that fits your personality. If you took Tom Brady, right, and made him a nose guard, he would not be a good nose guard. He is doing what fits his personality or whatever, his natural abilities. So a big problem I see, with beginner traders, Rodrigo, is that they want to emulate someone else, or they want to join some school where it's like, oh, trade like I do, watch what I do. Maybe that works for some people, but that's not what we do here. And because this is a trading school, it's for education. It's not like, oh, this is the Benzinga trade of the day or, idea of the day. If you like it, come back tomorrow. And if you don't, go badmouth us in chat rooms type of a thing. My goal is to teach people to learn how to teach themselves. So
Yeah, and that's important to note because there are different ways of trading, and really the fundamentals of it is what is at the core. It's what you're teaching, right? So it could be for a crypto trader. I mean, in my personal experience, if I am like trading an option, I really benefited from learning how to read charts better because I started getting better entries on my trades, on my options. So, and so people that are doing different things can benefit from this, correct?
It doesn't matter what you trade. It doesn't matter what your style is. You can benefit from this. You could be, a long-term buy and hold philosophy. You could be a short-term trading philosophy. Now, let me just show you, a couple things here that we've reviewed in the class recently, right? Let's talk about cryptos. if you're a crypto trader, whatever style you have, I firmly believe that this class can help you. So let's look at this when we go into Bitcoin here, right? What did I talk about? What is lesson number 2? Levels. Certain levels are more important than others. You don't need to be a market guru. You don't need to have worked for Stevie Cohen or, be a CMT to look at this chart and see like, oh, gee, wow, look at that. The 44,400 level is important for Bitcoin. It's an example of important levels. How would this benefit you? Well, think about this. Say you bought Bitcoin at, I don't know, let's just say hypothetically you bought it at 38,000. And you thought, I bought Bitcoin at 38,000. All right, cool. It's going higher. Now Bitcoin's at 40,000. Now it's at 41,000. Now I'm a market guru, right? Come on, you guys know, you've all been there. You have a trade, it's kind of going your way. You think you're a market guru. And you say to yourself, you know what? I bought it at 38,000. If it gets to 48,000, I'm going to sell it. I'm going to be up 10 points or whatever. Now, had you not looked at the chart, or had you not understood how to read a chart, you wouldn't have understood that there's resistance around 44,400. So guess what happens? You buy it down here, 38,000 or whatever. It gets to 44.4. You want to sell it up there, but it's never going to get to your level. You didn't realize that there was a resistance level. So Bitcoin gets to this, and what happens? It goes lower. So a big part of what we talk about in the class, and a big part of trading, is this. And when I say this, it seems pretty self-evident, but in the real world, it doesn't really work out this way. I don't care who you are. You could be the smartest person in the world. You could be a chess grandmaster with a 2,600 rating. You could have 190 IQ. Maybe you could bend metal with your mind. Well, if you could do that, you don't even need to be in the market. You have another career. But the market is always going to be smarter than we are. And every time you think you got it figured out, just get ready to lose, because that's what's going to happen. So if we think about, all right, I bought Bitcoin at 38,000, I'm going to sell it to 48,000. Maybe eventually it gets there, but from a shorter term point of view, had you realized there was a resistance level around 44.4, you might have said, hey, I bought it at 38. I'm going to sell it at 40. The only reason why I'm saying 48 is because I'm just pulling numbers out of the air. There's no logical reason to have your trade there other than you just think psychologically, oh, it's up 10 points. I like that, up 10 points. That's not the way we want to look at the markets. We want to let the markets tell us what to do. Now, if you bought Bitcoin at 38 and you sold it at 43, it's not as good as selling it at 48. Sorry, if you bought Bitcoin at 38 and you sold it at 43, it's not as good as selling it as 48, but it's better than missing it and having it come right back down to now below where you bought it. So we one of the things we talk about in the school is that we let the market tell us what to do. We don't guess. If you guess, you're eventually the market is going to beat you. So all right, so now let me go through the sectors here a little bit, because a lot of the students like to talk about the sectors, and I like to talk about the sectors. And when I was in the institutional hedge fund world, this would be basically the first thing I would look at every day when I would come in. Well, actually, that's not true. I would actually, get my bagel and orange juice and, read the New York Post sports section. And then I would, go through the markets. So if we go back to the market crash of the COVID. All right. We're gonna take a little walk through history here, and I can show you guys the articles I put out where I pretty much picked the bottom here, and I didn't have a secret system. We're just looking at levels. So when the COVID crash came back in, going on 2 years ago now.
Hey,
What
really
happened?
quick, Mark.
Yeah.
Just want to give a shout out here to Barry. Welcome, Barry, to the family, newest member here of the trading school. See you there, my friend.
Welcome, Barry. So, here's the thing about all these market sell-offs is that they find levels, but they can go longer than you thought. So I just want to go back over a couple things here. And, I don't mean to scare you, but I think I do mean to put you on guard and just to keep things into perspective here, because the market's been going up for a long time now, and people frankly think that it's easy, and it's not. I think there's a chance we could be on the verge of a really a longer term sell-off here. Like I don't see any reason why the market is going to come back in the next week or two to all-time highs. I think we're going to have a long, prolonged sell-off, which can go longer than people thought. And like I said, there are ways that we can, hedge ourselves or profit from this. Now, I just want to give you some historical examples here. Now, as traders, as technicians, we are kind of by definition historians because we're looking back in history. Again, I don't want to freak you people out, but I just want to show you to how severe a sell-off can actually be. So let's go back here to 1929, right? We've all read about it, blah, blah, blah. S&P, or I'm sorry, Dow Jones, I don't think the S&P 500 even existed then, went from 373 all the way down to here, 37. 90% move lower. That's big. 90%, right? You had $100, now you got 10. Now let's move up to the internet bubble, which is where I got my start. And to be honest, like you look at this chart, you can barely even see it, but trust me, it happened. We'll hone in on it a little bit here, a little bit more here. So this is the internet crash. So the Dow Jones peaked in January of 2000, didn't bottom until March of 03, right? It's a long time. That's a 3-year downtrend before we got the market going higher. And as a lover and of the markets and a history guy, I just have to show you this, even though it's a little bit off topic of what we're talking about. Right? Everyone talks about, well, buy and hold, buy and hold, buy and hold, buy and hold, right? Well, it's because the market's been going up for 10 years. Buy and hold is easy. Now the market's going down. Just a little flash here for people that are interested in history. Look at this. The Dow Jones, we're looking at the Dow Jones, right, which is now 33,000. The Dow Jones hit 1,000 in February of 66. What was going on then? I think that was after Kennedy was assassinated, Johnson was president, Beatlemania had hit the country. Now we go to 68, right? Summer of Love, hippies. Now we go to March of 73. I don't know what was going on then. I was alive, but I don't really remember because I was only 4. Then we go to 76. What I'm trying to show you here is the Dow Jones hit 1,066. It did not break through it until 1983. So for those of us who have been following the market for the last 10 years, or forget the last 10 years, for the youngsters among us who've only been following the market for the last 10 years, there's this whole thing like, oh, you can't outtime the market, buy and hold, you can't outtime the market. I will tell you categorically that that is wrong. You can outtime the market. You just need to watch the market. And that's what we do in the class. But anyway, just going back to this, right? It took 16 years for the Dow Jones to break the 1,000 level. Isn't that kind of astonishing? Because logically, there's no reason why 1,000 should be important. But we know from our lessons class, number 2, that there are certain levels that are psychologically important. All right, so now let me move back into the realm of the present. And what I'm just trying to emphasize is that markets can go down for much farther than people thought. So now, or much farther and longer. What are we watching in the class? What are we going to do to get insight into where the market could potentially go, not just tomorrow, not just over the next 2 or 3 days, but, are we really on the verge of a new bear market, which I think we are, or are we going to get some kind of a dramatic rebound? Well, we already saw that all the, for lack of a better term, and I hope no one takes offense to this, the garbage stocks, all these, Reddit stocks that, never made money. And in the long run, a stock needs to make money, or the company needs to make money for the stock to have value. That's what the market is, actually make money to actually have a value. So that stuff, the garbage is all blown up already. In the market, so the last stuff to go down is the good stuff. Now here's Apple, right? Apple is obviously something that's good. These guys make money hand over fist. It's like one of the most astonishing things about Apple is how they can every year come out with a new phone and make people buy it. Whatever. Clearly, we know that Apple is a great company that's run very well. But look at this. It's testing this important level, right? This was resistance. Resistance becomes support. There are people who sold, thought they were gurus when the stock went lower, but then it goes higher. And a lot of these people regret selling. So they say they're going to buy it back. But they don't want to pay more than they sold it for. So what do? They place their buy orders at the same level they sold it at. And that becomes support. And that's what's happened here. But now we're testing this support again. And if this breaks down or breaks through, there's a good chance we can go lower. Now, in the class, one of the things that we do is go through the broader markets pretty much every day. Now, we start with the S&P 500. We call this like the mothership, so to speak. I know it's kind of a dumb term, but this is like the broad market. This thing, like every stock that is, not a penny stock or some garbage stock, is included in this benchmark here, the S&P 500. So this is where we started our analysis. Now this is a combination of parts. The S&P 500 consists of 11 different sectors. So we can get really good insight into which way this is going to move by going through the sectors. Now, it looks like S&P is trading up a little bit in the pre-market, right around here. Nothing special. But one of the reasons why, as a class, we, to be perfectly honest, got these 2 big recent moves right. And for the day traders, they really did, they've been, clocking some money over the past week or 2. Someone said they're making some bands, which I don't even know what that meant, but I guess it's a good thing. But anyway, what do we have? Support level. Level breaks, we get a move lower, find support, and we go higher. So this is the S&P. Now let's look at the individual parts that make up this puzzle. The biggest one is technology, the technology sector. So, and you guys can even see this. I put it in the Mark's training ideas thing in the chat, but on Friday we had this weakness. We had spent 5 or 6 days trading above this support level here. When we broke this level, it kind of told us that, we're going to get this big move lower. We had an important support come out, and sure enough, that's what happened. This was what, like, the biggest day lower in years, down 357 or 3.57%. So a lot of the students caught this on the downside. Again, I don't have a secret system. I'm not showing you guys like some, like, I don't even know what to call, like, some secret formula or whatever. It was just, all right, well, this thing's been teetering on an important support level. We go back to levels, lesson 2, support here, support here. Remember, certain price levels are more important than others. If you never hear my voice again, just remember that, and you'll have an edge over a lot of your, other traders. So we broke this, and that told us we were going to, there's a good chance we're going to get this big move lower. Sure enough, that's what happened. So we also got this big move higher. Not a huge move, but over on Wednesday. Why? Well, let's look back in time. A lot of times when things are selling off, we say, where is there a chance that this could stop? Where could this sell-off end? Well, a lot of times sell-offs end when they get to price levels, lesson 2, that were important in the past. So we're going to scroll back here to April of last year. 143 was an important resistance levels. Resistance levels can turn into support. So that's what told us that there was a good chance we were going to get a bounce there. So by looking at these individual parts of the puzzle, we can get a really good insight into which way the market is going to move. So now where are we today? Well, I think this move higher has petered out. We got back up to where an important level, a level that was support, becomes resistance. This is even easy. This is easy to understand why a level that was support becomes resistance, because people that buy here thought they were the gurus when it went higher. But when it goes lower, all of a sudden it's like, oh, I made a mistake. So a lot of these investors decide to sell, but they don't want to take a loss. So they make up their minds to sell, but only if they can get it for the same price they sold at. And that's why a level that was support can turn into resistance. And that's what we're seeing here. Now, let's go back to what I was talking about with that important level with Apple. Now, Apple dominates the market just because it's such a huge company. But if we want to get some insight into, what's going to happen with the market, and in my opinion, and I could be wrong, I don't guarantee anything because the market's always right. So we have to let the market tell us what to do. But, the garbage has been going down, and now the good stuff is going down. And if Apple breaks below this level here, I think there's a good chance we get, kind of a meaningful sell-off over the next week or two. Now, is that something we should be afraid of? Well, we don't want it to happen, but let's just remember we can hedge or even profit with some of these inverse ETFs. So that's kind of where I'm at on the market right now, Rodrigo. I think that there's definitely some headwinds. We got inflation moving higher. Let me show you guys something on oil, actually. And there's a couple
Yeah,
of
and
oh wait, go ahead, Rodrigo.
Another thing that we can also talk about a bit is how the Russia-Ukraine thing has impacted the stock market and specific sectors as well. But nobody's talking about, like the China and Taiwan situation with the semiconductor chips and who are going to be the winners and who are going to be the losers, right? So especially with Intel, I think they have like a plant they're going to do. It's like a $100 billion plant, some huge crazy number, like investment on like manufacturing, because it's mostly in Taiwan from what I understand. But what are your thoughts on?
Well, if we go into the whole geopolitical realm here, and we in the class, we don't generally want to get into politics, unless they're relevant. And if there's something that affects the market, then they're relevant. So, there's a lot of different thoughts and stuff going on with, the Ukraine, but in my opinion, at least from this point, I think Putin has kind of won, right? Because all everyone's doing is just like, oh, well, we're against you. We're unilaterally against us. We're going to hang out at the UN and eat caviar and, eat some, shrimp cocktail and talk about how evil Putin is. But meanwhile, is anyone doing anything? No. Just like when, they went into Syria and used poison gas 15, 14 times. So if you're the head of China, you're probably looking at this thinking like, another year or two, I'm going to be good to go. So, that's a really deep question that has a lot of different implications. But I just think that, there's a good chance that, what was it? Like August, we had Afghanistan. Now we have this. Who knows what's going on in 6 months? Maybe it's going to be Taiwan. But if we go into, an investment mode, I think that's kind of, more of a reason to get into the, let's think about ways we can protect ourselves with markets going lower, with our inverse ETFs, with our inflation-based ETFs that go up if inflation continues to go up. Like, for example, this ETF here, a lot of the students have gone into. Now, it's given back some over the last few days because it got ahead of itself, but I would expect that inflation is going to continue to move higher. And I guess I'd have to say this, Rodrigo. I don't see really too much to be bullish about in the market. There's nothing that I really look at that says, oh, it's time to buy. Actually, let me give a little caveat to that. Some of these inflation-based stocks, I think it's time to buy. Like, for example, here's U.S. Steel. And I know a bunch of the students are in this. And, this is from yesterday. This thing has gone up like 15% in 2 days. And this goes back to our classes. This is the stuff we talk about in class. U.S. Steel rallies. Okay. Well, why? We're talking about inflation. All right. Gets overextended. Momentum. Things that are overbought tend to reverse. It reversed. What happens? Got back down to an important level. Things that get to important levels, tend to rebound off them. This level became support because it was resistance. Resistance becomes support. So, it's kind of almost hard to believe that you can make such a big profit off a steel stock. And, this is steel. It's not like biotech or crypto, but off a steel stock in 2 days. But this goes back to our principles of what we're talking about. Certain levels are more important than others. Momentum. When things get overbought, they tend to reverse. When things get oversold, they tend to rally. So right here on this boring, steel stock, there has been big money to be made. And it all goes back to the basic principles, levels, trends, momentum. So these are some of the, this is what we try to completely reinforce in the class, Rodrigo.
Yeah, and it's important to note that it's the concept, right? It's the concept, it's the explanation, right, of what's happening in the markets, and these concepts, strategies, setups, levels, all these things that you talk about, they're great. And that's why I think But if with the investment psychology class, I think that's why that class is like stands out to me, because none of that works if the I don't want to say if your if your brain is not wired or nothing like that, but if you don't have the training, if you haven't had that background, it doesn't matter. No strategy will work if your psychology is not where it should be, I guess, to say it that way. Um, but yeah, that's the school. You have a lot of interesting classes there. You have levels, momentum, trends, investment psychology, trading systems, market analysis, sentiment. And you also learn a lot of other like day-to-day things, small things here and there that we as traders use, indicators, not chart indicators, but like reports that we read, how we read those reports, things that are coming out. If there's a jobs number, we're always looking at it. So all these things, you can check them out on Benzinga Pro, but the community inside the school, everybody helps each other. Everybody, it's a great environment. It's not like these pump and dump chat rooms like on Reddit or Wall Street Bets or, like those public forums where, like join my Discord, all that, So we don't have none of that stuff here. Everybody that's in the chat room, it's like a real person, a real trader. And we have people from all over the world. So people, all the way from Asia to Africa, Usman, my friend here from Nigeria, like people, you'd literally be surprised, like people from all over the world. And when you come together in a chat room, right, and with an educator, a mentor like Mark, the ideas come to life because 100, 200 eyeballs are better than you doing it by yourself, which is, I call that vacuum trading. And it's something that a lot of new traders fall victim to, basically, where you pretty much doing it on your own, right? And of course, you are winging it, right? So don't wing it, right? You have to. The best results, like I've seen some results, just like Mark has with some of the students here, and the best results, of course, are the people that are able to watch at least one or two sessions, and there are recordings if you missed the class, but just one or two sessions a week, that's time well spent. You're not watching Netflix, you're not doing nothing. Like, this is a skill set that's going to help you make money for the rest of your life. So I would pay attention. I would treat it seriously, because it's not like a side hustle. It really is like something that, long term you can use even when you retire and things like that. So I think it's a great thing, to have. And the community, again, it's very cool. I would join it. You guys, you have a 7-day money back guarantee, really. So test it out, really feel it out. Classes are Monday to Friday. So you can be in a community. You don't have to trade alone. I would say if I would do something different, it would be, I would have tried to find a nice community that I feel wants to help me. And I think that you will find that in the trading school, right? So yeah, Mark is back here. What's going on, man?
Well, I think that, we're, people might be asking themselves, well, like, why should I join this, trading store? Why should I give it a try? And yeah, I mean, in my mind, there's a lot of reasons. I mean, in my mind, I think we should be charging a lot more and stuff. But I think that, the market is gonna come to a point where it's going to be like the buying time of me, maybe not the decade, but maybe the decade. When we go into these really big bottoms or these really panic sell-offs like we had with the internet crash and with COVID, those end up being phenomenal times to buy. And I don't know when it is going to happen. It could be tomorrow. I mean, I don't think it's going to be tomorrow. It could be next week. It could be in 2 months. It could be in a year. I think right now the market is in the mode of fear, right? But fear, this is the S&P 500 again. So this is the broader market here. So, let's think about this, like, jubilee, euphoria, people making money. Go down here. Oh, what did I just see? Wait a second. Back up. All right, well, that's okay. Wait, we're back down again. Now we're getting into fear. But just because markets are, afraid doesn't mean they can't keep going lower. What we need to wait for is the capitulation, like we had back in, like we had back here, in March of 20. My guess is that the market continues to go lower. It's not the same thing as COVID, because like Mark Twain said, history doesn't repeat, but it rhymes. But we might not get a bottom that's this ugly, but we're going to come to some kind of a capitulation bottom, and it's going to be like the best time within like a decade to buy.
And the thing is, Mark, like with these, so it's safe to say we're in a crash, right? We're literally hitting it.
Oh yeah, the crash is going on. If you're a Reddit trader, and your stocks are down 80%, to you, it's a crash.
Yeah. So we don't know if this is going to finish next week or in 3 years. It's possible. Anything is possible, right? In the market. So I think this is really why at this point, I appreciate more the community when things are happening in the market and really everybody's trying to, of course, make sense of it and, make money with this. So I think that it's good that you also help traders, not only, you help them make money, but you help them not lose money, right? Because it's not just about how many gains, but it's also about, the losses too, right? Control the losses as well.
Yeah, I mean, here's the thing, right? It's like some people who are beginners or who are kind of new to the game think that the people that are really successful have these like infallible systems that are never wrong. But that's not the case. Let's think about baseball or any sport, right? And we're going into March Madness. And again, I hope I can stay up till 9:30 to watch my team UConn play. You're never going to be perfect. Like, let's think about baseball. Babe Ruth struck out more than any other player. So I think a lot of beginners think that there's these perfect systems that are infallible, but that's not the case. You're always going to have losses. You can't control that. But what you can control is having big losses. If you just take your bad trades and just, get out of them with small losses, that's part of the game. And if you can accept that, you're gonna win. It's kind of a weird kind of thing. It's like, accept the fact that you're going to have losses and you're going to be successful. Because if you can make those losses small, then the trades that you have that are the winners are just going to take care of themselves. If you worry about the bad trades, the good trades take care of themselves. And that goes, pretty much directly back to your favorite lesson, Rodrigo, is lesson 6, is, the psychology of it. We have to look at stocks as, I'm just going to bring up a random stock for no other reason than, I don't know, it's letter A. So whatever, Agilent Technologies. This stock here is not your friend. It's some tool that you can make money off of. And that's why you need to look at it, or look at it. Actually, let me bring up Tesla, because that's a little bit more of a good example. Right now, if someone buys Tesla, they kind of become a member of this herd. They get, because you have a guy like Elon Musk, who is, such a prominent person or whatever. But you shouldn't look at this stock as like your friend. It's just something you use to make money. Like, pretend you were a carpenter, right? And you might be a carpenter. If you had a hammer, your hammer is your tool. You're not going to develop an emotional bond to it. At least I hope you don't develop emotional bond, because you're a carpenter and you started taking your your hammer out for dinner, people might think you're a little bit weird. So we have to look at these stocks just as tools to make money. Now, one of the things I want to bring up before I got to get going here is I get a lot of questions about day trading. What is the best day trading style? What would I do if I was a day trader? And I want to show you some of these examples here because I think they're, pretty good. And there's something that, there's a lot of different day trading strategies, but if I was to spend my, energy being a day trader, this is one of the things I look at. And, this is a month or two old, but we have stuff like this a lot. And we have some stuff that's open right now, which we talk about every day. I'm sure we're going to be going over it tomorrow. But let's look at this Domino's Pizza. One of the most, I think, effective ways to implement a day trading strategy is this. You look for stocks that are overbought or oversold from a longer term perspective. When we're looking at a day trade, we shouldn't just be looking at what's going on in that day. A lot of day traders just look at that day, just that day, right? If you're trading Domino's and this was January 3rd, you would just look at Domino's on January 3rd. I think there's a better way to do it if you want to be a day trader. Look for stuff that has longer term things going on, a longer term overbought or oversold condition. Because the reason why stocks make big day moves within a day, unless there's news out, is because of longer term fundamentals. If news comes out, earnings and stock might be up, big or down. But if no news is out and it's making a big move, there's probably a good chance that it's some longer term dynamic in play. So we're going to go back to January 3rd. And I believe this actually came from one of our students, said, hey, let's take a look at this. So we have Domino's Pizza. And what do we see? We're overbought. We're above that Bollinger Bands. I don't know if we talked about that, but Bollinger Bands are something that we look at to see if something is overbought or oversold. This red line here is 2 standard deviations above the 20-day moving average. Why do we care about that? Because if something gets above that, there's a good chance it's going to revert. A lot of quantitative or computerized trading models are based upon statistics. And the whole concept of standard deviation is statistics. So if something exceeds this threshold, it tells us that it's overbought.
Is this a trade from the school?
Oh yeah, dude, totally. January 3rd. Yeah, we talked about this a lot. This wasn't even one of my ideas. It came from a student. And that's, I forget which student it was, but yeah, this was something we talked about in school. And we have a couple open that are open now, but I just, I think this is a good thing to show people here. So the signal or this setup, so to speak, was, hey, we're overbought. There's a chance we're going to reverse. Momentum, class, what is that? Class 4. Levels. We got above a level that was resistance. Levels that were resistance can convert into support. That's class 2 levels. So this stock was oversold. We saw it because of the above the Bollinger Band. Overbought stocks tend to reverse. Now, here's what we're doing for the day trade, and here's the secret. Well, not that it's a secret, but here's the way to trade. Identify short-term support levels. Now, something's overbought, we're expecting a reversion. The next step is what could happen that could tell us that that reversion is in place. And in this situation, it was the reversal back below this important level of 550. So now we are going to look at Domino's Pizza on this particular day. I'm sorry. This wasn't a particular day. This is just a closer term. This is, a 6 month. This is like a 2 month. So after this thing gapped up, we saw that this 557 level was important. It was resistance, or it was the closing price, closing price. Over these 5 days, there's a lot of volume that traded at 550, 750. Your closing price, opening price, closing price, opening price. Most volume trades on the open or the close. So the idea was, we have this stock that's overbought. There's a good chance it's going to reverse or revert. What will tell us that that is actually underway? The answer is a breaking of this support. So the level broke support, and this is where the trigger was to go short. We covered around 550 because that was the longer term level. You might notice that it went even lower, but we don't second guess ourselves. We don't say, well, I covered at 550. I could have covered at 540. Who the hell cares? We made a $5 profit in a matter of a half an hour. And if you were an options trader, you could have, doubled your money, or, made 50, 60, 70%. So this is, kind of like that Tyson trades idea that we talked about before. We can take, longer term or broader term things, and we kind of, we start off with the shotgun approach, so to speak, and we narrow it down into a particular thing. And we just stick to common sense, and, common sense and logic. We're not looking at anything we're not looking at anything esoteric here. We have a stock that got overbought or overextended. We're waiting for the reversion. The reversion happens once we cross this particular level, and then we were able to make some money there. So this is another really good example, Rodrigo, of how some of the students have been able to make some money off, again, common sense logic. No, we're not reinventing the wheel here. We're not building a better mousetrap. We're just following logic and common sense.
Yeah, absolutely. And the fact that you're able to explain this and simplify this for everybody, it helps a lot as well. So yeah, we've had a great session here. Mark, do you have any closing remarks, and how can the folks join you on the school, and if they want to be with you Monday to Friday and classes, all that stuff with you?
Well, I think, look, the best reason to join this class is because you can make money, right? That's kind of what we're all after. But I think the fact that we keep it to logic and common sense, and, Wall Street makes stuff more complicated than it is so they can charge high fees. And that's probably ringing a bell with a lot of people right now. It doesn't need to be as complicated as people think. So I think that's another reason to join. And we look at the markets in real time, which is another reason. But I think kind of the ultimate reason at this point is, to me, it's like, it's my class, dude. I think you should join anything. But if you're out there thinking like, oh, should I, take a shot in this class? Well, eventually we're going to come to a big bottom. And is it, next week? Is it in a month? Is it in a year? Is it in 2 years? I don't know. But when it happens, it's going to be, it's going to be one of the trades that you make that you'll remember the rest of your life. Like the bottom of March 20 was. And, you don't need to be a sophisticated options trader or anything like that. But, if the market starts to rebound, we can start talking about getting into leveraged ETFs, which get more bang for your buck. But I think, I think ultimately what it comes down to, Rodrigo, is that this class is successful because we don't guess. We just let the market tell us what to do. And as long as that happens, we're going to be okay. Once it becomes Mark Putrino's opinion or Rodrigo's opinion or anyone else's opinion, that's time where it's like, move on to a different class. And we're never going to get there. This class is, we let the market tell us what to do. And the market will always be right. It's a strict teacher and you'll lose some money, but, in the long run, if you follow the market, you're going to come out ahead. So I think that's we are not trying to outguess the market here. We're students of the market, and we learn from the market. And if we learn enough and we're humble enough, we can make some money. And I think so far things have been really good. And I know that people have made a lot of money so far, Rodrigo. So far so good, my friend. I think you're on mute, dude.
Yeah, my bad. Yeah, it's great to have that, man. And the folks, the feedback is there. Cypher, everybody, like I talk to these folks almost like every day, like it's what I do here. So I hear the feedback, they love it. They love the sessions, they love the back and forth. I mean, this is straight up the closest you will ever get to a tutoring or one-on-one, whatever you want to call it. It's the closest you're ever going to get, especially with somebody of the caliber like Mark Putrino that traded with Steve Cohen and Mark Putrino. It's just, that's just how it is, folks.
All right, everyone. I got to sign off. Start getting ready for tomorrow. Thanks, Rodrigo. Thanks a lot, everyone, for tuning in. And I hope to see you all tomorrow. Tomorrow's our fun class. Or Friday is like an open class. We just talk about whatever.
Yeah, I'm going to stay answering some questions here. If anybody does have Q&A session on the school for a bit. All right, Mark. All right. Thanks a lot, man.
Have a good night. I'll talk to you tomorrow. Thanks, everyone.
I will. All right, man. Thanks a lot. Thanks for being here, Mark. Mark Putrino, everybody. There you go. All right. So there we have Mr. Mark Putrino, former hedge fund manager under Steve Cohen, Mario Gabelli, Titans, like billion level Titans. These guys are just like, worldwide known for being like the best. So Mark Putrino is the instructor of the school. You just heard him. This is just a sneak peek of what we do every day in the class. It's a very fun environment where everybody can talk and like share ideas, research, feedback. And if you have 200 people looking at one chart, I'm sure you're not going to miss a lot of things compared if you have only yourself looking at a chart, and if you're trying to wing it. So, don't trade alone. There's no reason to do that. It's not helpful. It's not beneficial. It's not, best results are achieved when you're trading with a community, and not just any type of community. That's what I want to expand a bit on that. The community is so important. It's like, tell me who you hang around with, and something. There's a saying like that. So if you are in a good community, right, where everybody's helping each other, you'll know, obviously, right, but you'll be able to learn, right, the right way, and get feedback on things of other real traders, right, not fake accounts, people that are seriously trying to make money in the markets, right? So there are people that are here all day trading Mark's trade ideas and setups. There are people that join just for the setups. There are people that join for the setups and the live classes. And there are even people that sign up that are not even trading. They're just learning, right? So, many brokerages account, they're getting a little bit more tight with opening accounts and letting people trade certain things. And now they're making you take quizzes and things like that. So they make you take a quiz, or you can't trade, you can't open an account or whatever. So some people actually just get the school for the education, because I know that specific brokers that do ask you like a quiz type questions when you're trying to trade certain things like that. So guys, you can do it for whatever reason, right? If it's for school, if you want to do it to learn, to make money, to be with a nice community, which is the highlight. I would say the community, the people that we have in the chat, in the school, it's the best community you're going to find out there, right? It's international. Everybody's focused on making money, and that's all that matters when it comes to trading. So that community to back you up, to give you that support that you need. Sometimes you need an honest opinion, man, like I wouldn't go to a public forum for that, but obviously if you're in a trading school with other members, it's different, right? You are there for a purpose, right? You're not just wandering around, things like that. You're there for a purpose, and other people are there as well. I talked to many of these students, like 99% of the people I've talked to them that are in the school, and everybody's committed, everybody's ready to learn. we put in the hours, we give you Benzinga Pro as well, so that you have more tools at your disposal. So these are the chat rooms that I'm showing you. There's one called Student Trade Ideas, and this is where everybody's posting. Chica Blue, it's posting. So Brandy, let's see what Brandy's saying. Hey, y'all, found a nice opportunity for us to take advantage of. So I mean, people are sharing. We got a special guest here. The cat came. So yeah, the students are posting research and trade ideas, like my friend here, Brandy, Mr. Luke here. Hey, y'all, found another. Oh, that's different. That's so. Luke is saying, hey, y'all, found a nice opportunity. So yeah, I mean, some people are working together. I mean, as you can see, this is a nice environment. This is a great community where people are actually sharing trade ideas, trading setups, giving each other feedback. I've seen some really nice things, beautiful things that make me feel, like so happy. It's like when I see someone, let's say that they sign up for the school and they're super new, and you see the progress and they're like, I'm not doing these mistakes anymore. And like, I've been able to sharpen my toolkit for trading, my skill set, right? Because that's what this is, right? Building skill sets that will benefit you on the short and long term for your trading. You're building skill sets. You might have to learn some new ones, and you might have to unlearn some things and relearn them again the right way. Ben is asking, can we start the school at any time? Yeah, dude, anytime. You can join tonight. We have the deal just for tonight, so probably a good time to do it. So yeah, I mean, if you want to look at it that way, so it's for the full, it's for for the month, so it's like $7.97 for the month, first month, and then it's $147 the month after, and so forth, $147 every month. And keep in mind, you are going to keep the Benzinga Pro, so you can start anytime, Ben. All right, let's make sure I'm not missing any questions here. Red's in the chat. What's up, dude? Cypher. Yeah, I mean, Cypher has definitely enjoyed the school, and some good feedback. Also, I don't know if you guys know, but like, we're super big on feedback when it comes to all of our services. So we are user driven, right? We try to look at things from the user's perspective, and that's why number one, that's why we have the school to start with, right? But then we keep adding more things, and we keep improving not just the portal itself, but giving you guys more things, right? That's why we added Pro for free. So this is the chat room. I just wanted to show that really quick. All right, so in the top here, you're gonna have a couple options, right? Home, this is the home page. And if you go there, you can see what's going on, right? So like Tuesday, we have 2 events on Tuesday. We have levels, okay? That is the class that we will be doing on Tuesday, March 15th. Levels, and then 7 a.m. Eastern. That's when the classes starts, from 7 a.m. Eastern to 7:45. And then from 7:45 to 9, you have a Q&A session of the entire lesson. And then from 12 to 1, we have a recap. And that recap is basically, we're pretty much like going over everything we saw the day, right? So, okay, these are the concepts that we discussed today. This is where we applied them, just kind of like a summary. Some people, they just watch the lecture, first 45 minutes in the morning, and they watch the Q&A sessions, and they watch the other stuff later because the recordings are available. So it does give you that versatility there. So if you have a full time, or you're busy and whatever, you have the recordings available, right? So the classes are live, but the recordings are available if you can't attend live. So keep that in mind, folks. You have to, I really think putting 45 minutes a day at least, it's something you can find, right? I don't have time. Come on, you have time. You have to make time. You have to make time for the things that matters, and for the skill sets that are going to benefit you in your long term, in your trading career. And part of that is education. You can't skip it, man. You can't skip high school, college, and then want to become a neurosurgeon or a lawyer out of nowhere. Like you have to have there are certain blocks that you have to cover, and until you don't if you don't cover those blocks, you could still learn a thing or two here and there, but you're going to have gaps, and you're not really going to get the full picture where everything is connecting and you have that aha moment. So that's why the education is important. People want the education typically after they blow up their account. Don't wait for that to happen. So if you're doing very risky trades and you're doing a bunch of YOLO trades, I'm telling you, it's just a matter of time for you to blow up your account. And it's not that rare, actually. I talked to thousands of traders around the world. It's very often that traders will blow up an account. And then after that happens, that's when they call Rodrigo. And they're like, yeah, I should have joined the school and such. But look, that's why education is something that you can't put on the backseat. If you're going to invest in yourself, you have to invest in your education. You have to. No one else will do that for you. And we could even give you the classes, and you could still, you've gone to classes and didn't learn anything, right? So, all these things are going to help you develop those skill sets that basically translate into you becoming a better trader. It's not just one chapter, right? It's not just levels. It's not just momentum. It's not just investment psychology. It's all of these things combined that will create a different picture in your mind of how to approach trading. And I know that for new people, really that's good, because if you're going to start, if you're learning and you're starting to trade, you want to start the right way. If you're starting something important, a big part of your life where you're going to start trading, or you're going to start looking into developing this skill set, right, for income, then put a little bit of time a day for it. You can go to the class, you can talk to Mark, you can use Benzinga Pro to find research and trade ideas and educate yourself on the markets. So Pro is a great tool as well. It has education. It's all education, because you're all learning, seeing things there that we're showing you, giving you tools, customizable, giving you that edge when it comes to trading, right? All these people that are in Wall Street, like the big suits, it's not like, they have a crystal ball. They also have a lot of good tools, tools that cost millions of dollars. And these tools are not available to retail. Not all of them. Some of them are, but not all of them. Some of these services, you might spend millions of dollars to get that information, and the provider of that data only caters to hedge funds or equity firms, not to retail traders like Brandy or me or Chris or Janet. So as Benzinga, we come in and we're disrupting the game, and we're giving you guys all the tools that you need, and even building new tools for you guys so that you can have an edge, have a bigger edge, a wider edge, right? Who do you think is going to do better? Someone that has no tools, or someone that has the tools? That's what I would say, guys. The education is not something that you can just put on the side, especially in this market, because look at what happened in this market now. Everybody's scrambling, trying to find education now. But they weren't doing it 6 months ago, Sorry, folks. So yeah, don't wait until you blow up your account to try to find the education. That's what I see so often, and I don't like being the, I told you so guy, but but I literally told you so. And it happens very often. So that's why the education is the most important part, especially when you're starting, right? Imagine that's why you go to high school and middle school, when you're young and a baby, right? You don't do that when you're in your mid 50s. So if you do it from the beginning, it's only going to help you. So the sooner you start, the better it's going to be, guaranteed, because not only are you going to be able to start learning this, but then you're going to have those blocks of knowledge, of those skill sets that you're building, developing, creating, or sharpening up. You're going to have those blocks set, and then you're going to be able to start learning things on top of that. But you need to have that foundation. You need to have that foundation so that you can understand the markets better. And the better you understand the markets, the better you will do as a trader. Common sense. So learning the markets, learning chart analysis. You know, if you can't read a chart, it doesn't matter what you do, you're going to lose money. It doesn't matter if you're trading options. It doesn't matter if you're trading crypto, if you're doing like whatever, it doesn't matter what you're buying. You know, that's just, you know, important to know. And yeah, you can see Bitcoin on Benzinga Pro. So that's the homepage, guys. You can see that that's where all the recordings are. Sorry, this is where like the schedule is. So if I go Wednesday, March 16th, let's see what's happening there. So it looks like the class for Wednesday, March 16th is going to be trends. And the classes are 7 a.m. to 9 a.m. and then from 12 to 1 Eastern. All right, so that's the homepage. If I click live, whenever there's a live class, it's going to take me here. And these are some of the messages that the people put there. So whenever there's a class, when we're in schedule, like in session, this is where you're going to see it. And then there's a chat room on the side. You can hide it if you want, but if you put that chat room, you can basically, how do I put this? You can hide it if you want, but this is really like good because you can ask questions to Mark live whenever he's actually giving the lesson. So if you have a question about the lesson itself, you can ask him on the spot. So Trade for What is saying, would it be wise to do SoFi puts? So, I mean, you know, people are talking, sharing trade ideas, helping each other. It's an actual class. It's like a legit classroom, only that virtual, you know, and you have a good instructor. Let's not forget about that. So let's see. All right, so this is just the chat. If I go on video library, what you're gonna see is all the lessons. So you have all the recordings. You have Q&A and the Q&A sessions as well. So Q&A sessions, that's where you know, literally questions and answers. So it's not like this literally is like the definition of handholding, like honestly, because you have Q&A sessions. I didn't show you the chat room. There's a chat room literally called Questions for Mark. Questions for Mark. There you go. And you have sound notifications on these things. Shout out to Tammy and Vin and all the people, Neil, that put so much work here into this platform, because this is only getting started, folks. I'm serious about it. There's a lot of good things that are coming. So Mark's trade ideas, if you want his trade ideas, you can get Mark's trade ideas. If you want to see what the students are talking about, go to the student chat room. They're talking about trade ideas as well, and education. Everything's coming from education. Questions for Mark. Do you have a question for Mark? We have a chat room called Questions for Mark. Okay. And on top of all that stuff, we have Q&A sessions that are for like about an hour every single day, and recap as well. So you have about 3 to 4 hours with Mark a day, and that's always going to be there. So let's see where else. So charts, you can click on charts here. It's gonna pull up some charts, And all right, so in Benzinga Pro, right? So now I showed you guys the school. I want to show you guys Benzinga Pro really quick. So this is just a basic chart that I have here. I'm looking at Tesla here. Let's look at something different. Let's look at a firm. All right, so you can do all of your charting here. You can do your lines. Let me put this. All right, yeah, this is the one. Okay. So you can set up all your lines and do your technical analysis, and you can follow up with Mark. So as he is doing the lesson and doing the charting and all that stuff, you can follow with your charting on Pro or on the chart that you have inside the school as well. Because I like this chart more, to be honest. But yeah, and then, you know, you have to use them together. So you use Pro to learn as well. It's going to help you, obviously, because you're talking about technical indicators. You're talking about levels, channels, like using your eyeballs. Okay. So having a chart inside Pro and inside the school, you'll follow through with the lessons, and you will have better results. So what I'm trying to do is to give you tips on how you can make the most out of the school and learn the most while you're in the school. So you can do all your charting, your analysis here in Pro, so that you can follow up with the lessons and all that stuff that Mark is showing you. There's other tools here that you can use. So let's just go over some of them really really quickly. Patrick says trying to sign up, but the page says my session ended. Let me check here. It should be working. I just yeah, checkout's working. So it probably went through there, Patrick. But make sure to email me if you can. By the way, anybody that joins today will be entered into a raffle that we will give out one VIP ticket to our event in Las Vegas, which is going to be in June. So everybody that, again, I'm going to repeat this, everybody that joins today will be entered into a raffle. We will announce it at the end of the week, and we're going to give out one VIP ticket so that you can go to the FinTwit event that we have, and we're going to have some great speakers there. It's going to be a great conference, a great event. Mark Putrino is going to be in the house. So we're all going to be there as a team. And if you do want to come and show support, you can do that as well. But what I'm going to do here is that I'm going to give away one ticket for free, and I'm going to give it to somebody that joins. So anybody that joins today, I'm going to have a little notebook, and I'll keep track of it, and then we're going to figure it out. So basically we will get, and shout out to Pat for joining. So yeah, shout out. So yes, you will get whoever, we will pick the winner from the people that joined the trading school. So now keep in mind, we're going to announce the winner in 1 week. Literally, this is monthly, the school, which are like how it is structured right now. It's $797 for the first month, and then like $147 every month after that, month to month. So if you can join for a month and have a chance to win a ticket to this event, which is like $2,000-$3,000, and I'm hooking you up with it, like, come on, I'm doing my best here. So yeah, we're gonna announce that at the end of the week. Let's get into Pro here really quick. So all right, so this is the calendar. There's a couple things here I just want to show you. I'm not going to take too long here because we've been here for 3 hours already. So you can filter this by your watch list if you want, or you can just not filter it by anything and let it ride on its own. This is a calendar, but you can do a lot of, it's like a multi-purpose calendar. So we have analyst ratings here, right? So I have it filtered by my watch list right now. So that means that every time there is an analyst upgrade, downgrade, initiation, termination, whatever, it's going to tell me here. So I can see that, by date, right? I can organize it by date, or however, I can see what is the street feeling about my stocks. Basically, look at it this way. You have your watch list, right? And you're asking Wall Street, hey, what do you guys think? And this way you get a kind of a feel of where big money is, how they feel about the stock, if they feel bullish, if they feel bearish about it. So if you see that, Facebook, Snapchat, Tesla, Apple, these are some of the stocks that I have in this watch list. You can see who the analyst is, right? Let me show you this. This is pretty cool. You can see the analyst, you can see the firm, where that guy works, or where, like the actual name of the firm. So you can see who's bullish, who's not. All right, I made that a little bigger. So, and you also have the SMART score and the overall success rate. What is this, you're asking? Let me tell you. I was talking with someone about this a while back, and these things take a little bit of time, but the project is ongoing. But basically what you are looking at, guys, SMART score, overall success rate, all that stuff. Oh, shout out to Ryan Beasley, who he's done some work here with options. So you can see the SMART score 94, overall success rate 90%. What are you looking at there? Okay, you're looking at what we track, right? So we're tracking certain, we're tracking the analyst upgrades pretty much. So we track if these guys were right, if they were wrong within their timeframes and such. So we have a way to pretty much calculate their accuracy when it comes to their ratings, right? So this way you can pretty much see the background. Is this guy right most of the time? Is he wrong most of the time? And basically that way you have literally like a ranking thing of who is the analyst that has the highest success rate. And then anytime you see, oh, look, Mark Kelly from Nomura or Eric Sheridan from UBS upgraded this stock. And I know that analyst is smart and he knows his stuff. He's right most of the time. So it's a good place to start if you want to find trade ideas. So you can do other stuff here with this. Let me show you with the calendar. You can filter this by conference calls. So if you want to get the conference calls of the company's watch list that you're looking at, you can do that too. Dividend calendar, earnings calendar, economic calendar, so you can stay up to date on all the Fed talk and all the rates, all that. FDA calendar, guidance, IPO, M&A, retail sales, splits. It's a calendar on steroids. We also have this thing called the movers tool. So this is really, really important for you to pay attention if you have Pro, or if you're planning on getting Pro, or if you want to join the school. So this guy, you can use it for two ways. I'm going to show you how to use this for short-term, long-term, but you can use it anyway, right? Because I have it set as gainers. You can do it for regular hours, and you have the different time zones, the different time periods that you can filter this by. You can also filter this by sectors if you want to just focus on the sectors that are working and not focus on the ones that are not working, like, of course. And then something that I like to do is that I like to put a minimum market cap of 2 billion. I try to stay away from these low floats that can be super heavily manipulated, shorted to the ground, not even with a lot of money, because, you know, short sellers, they just have more money. Obviously, they can short stocks hardcore, especially if they're low float. So, well, if they have a really low market cap, right? So they tend to be small companies, really low flow. It's very easy to move. So I try to stay away from that for the most part. And that's why I have that 2 billion minimum market cap. And that's not even too big. I think like a firm is 4 billion. So something like that, 3 billion. And then the price, I have it at least $10. Why do I have it $10? Because that's just me, right? But you can use whatever number you want. I think $10, $10 is good enough for me to be confident that this is not a pump and dump scheme. Obviously, I would like to see it hold more than 10, you know, I would like it to see it hold that, not just like, hey, it just went up, you know, 1,000%. No, I would look at it, you know, okay, these are the gains, because this is scanning the market, right? So I'm looking at the gains. I'm looking at the stocks and the companies that are doing good and the ones that are not. And then I pretty much narrow down, filter here, which ones I like. I mean, CVI, energy, I only picked the energy sector. So these are all the companies in the energy sector, above $10, above 2 billion market cap in the past week or the past month. You know, you could change it there and filter it, that have gone up the most. So find winners, find the best winners in every sector, only trade the best, don't trade, you know, not the best, pretty much. So, all right, so that's how you could use it. You can, as you can see, you can use this for like short and long-term stuff. So it doesn't always have to be like, if you want to use it for like day trading, things like that. So, and then, all right, so that's just so you guys know, this is like the only place where like the only pre-market and aftermarket scanner that is fully customizable, that you can filter by not only the time periods, but you can filter by the market cap and by the price. So your brokerage cannot do that. Your brokerage is not aggregating data pre-market and aftermarket. Your watch list does not get updated. You know, so it's like, this is why people come to Benzinga, right? Because they want the tools. What were we talking about earlier? That like hedge funds pay millions of dollars to have certain data, certain research, things like that. So the least you can do is get yourself something like Pro, because odds are already against you, man. So why make the odds even, you know? So that's really what I think, man, honestly. Like, if you try to do everything, just try to find everything, like the free stuff, you know, everything that's free has a price. Know that in life. So that's why I much better agree just having a good service and paying for it, and that's it. And it pays for itself, you know. It's not like a Netflix subscription that you're literally not doing anything, right? This is actually meant to help you make money. So what are you focusing on? What are you spending your time on? I don't know, but this this should be on the top of your list. And all right, that's the pre-market scanner. We have this other thing called the signals tool. You can filter this by, again, everything here you can filter. So you're going to hear me say that a lot, and I don't want to sound too repetitive, so I'll just say this. You can filter everything inside, okay? Almost everything here is filterable. So you can make it custom, just like I showed you on the movers thing, you know? So you can filter this by price spikes. Let's see, I have a lot of filters here, so I'm going to take them off. But these are some of the filters you can have, right? So market cap, shares outstanding, share flow, change percentage, average 14-day volume, sector. You can filter by more things. This is just what I filtered it by for this particular example. And you can take them off. So now I'm going to remove all these filters. Okay, so no more filters. And then you get the signals. So you have price spikes, you have block trades, you have halts, you have opening gaps, you have highs, and you have lows. Price spike is literally what it says. If the price is spiking of a stock in under a minute, it'll tell you the spike. Let's check this out. Indo price spike. Up 1.36% in under 1 minute. So you want to get in before the big rip? Well, this is something that's going to help you do that. Google is spiking up here. IRS, what is it? IRS? Okay. TSP. I mean, you got all these. So these are all price spikes. If you're the day trader scalper, like this is heaven for you. So that's the price spike. It could spike up or it could spike down. I'm going to take it off now. And I'm going to show you 52-week highs and 52-week lows. This is more of a technical trade for me because I look at, I mean, if it's a 52-week high, that's, you know, a 52-week resistance. If it's a 52-week low, that's a 52-week support. And I look at that and, you know, that is from a technical perspective. So if you do want to trade the technicals, you don't have to be staring at charts all day to wait for them to hit support or resistance. You can just have this filter that does that, literally catches every stock that is doing, right now there's no filter. So every stock, look at this. IRS passes 52-week high. RTW passes 52-week high. AMR passes 52-week high. NTR passes, I mean, all these stocks that are breaking through their 52-week highs, that's where the biggest rips happen. Like the biggest rips happen during the breakouts, and they break out from somewhere, right? They break from that prior resistance. So once they break that prior resistance, that 52-week high, prior high, it's game on. It's game on, baby. So now it could also be rejected and go all the way down to 52-week low. So that's why you have to have a plan and a strategy for what you're trading. Every trader is different, and if you are different, you're going to have different golden rules per se. If I'm day trading, I don't care what Warren Buffett has to say because he's a long-term investor, right? So the advice is not direct to who I am. So that's why you have to, number one, get to know yourself as a trader, what you like to do, and then start building a strategy around that. And this would be one that you might want to do it around, right? If you're going to expect volatility, you can pull up, I don't know, this is an example, right? And same thing, 52-week low. The stock that hits its 52-week low. If it breaks it below, to me, that obviously would be bearish because, you know, they lost a 1-year low, and who knows how low it could go, right? So, so you can trade in both ways. You know, you can do a straddle and just wherever it goes. So that's something pretty cool. If you want to check that out. So and you can also do session highs and day highs, and you can also do session lows and day lows. So really you can use it to scalp. You can, like, there's so many different strategies that I could, you know, that I use this for. Okay. Then you have the opening gap. Obviously this is what it says. It's a stock that's gapping up or gapping down pre-market. A lot of people trade the gappers, you know? So for all you gapper lovers, that's for you. We have halts. So halts is basically when a stock, it's like paused, like you can't trade it because something happened, news broke out, it moved like 30% or something, and it's halted. So Now, halts are very volatile. Okay, I'm not saying go out and trade every halt, but these halts can go pretty wild, right? So every stock that some people, what they do is that they literally just short these companies when they halt, but that's pretty dangerous as well because maybe you can buy some puts or something, but when things are halted, you can't even make a trade. You got to wait. So it gives you a little bit of time at least to see what you're going to do. And you can also plan ahead. So all these companies were all halted today. So let's see, 1, 2, 3, well, it's like 20 there. So you have all these companies that got halted, and then once they got unhalted, what happened? I don't know, but we can look at a couple here. Sofo got halted twice. The hell is this? Providing video enterprise solutions. Huh. Okay, what happened? Why is it let's look at the news here. So in Pro, you have like top level premium news that you do not get in other places, unfortunately. Benzinga is financial media. Remember that we're not a brokerage. We don't have checking accounts. We don't do any of that stuff. We're a data technology company, and that's why we're able to give you all this stuff here, including the news from out the world. Clean and clear news, right? No spin. There's a lot of spin on news. When it comes to your money, the news, a lot of people that I know that trade outside of the US, and the news that they see in their country is obviously propaganda. So they don't get the news there. So they're using Benzinga Pro to get news on some swear to God. So that's the good thing about Benzinga Pro. It's a bigger thing. So all right, back to Sonic Foundry. This is some sort of video company. It was halted twice today at 1:15 p.m. and then again at 1:20 p.m. So 5 minutes later, it got halted. Let's pull up a quick chart here. Let's go to the 1 minute. Damn. Okay. So, I don't know what this company is, but look, this is just one. There's a ton here. Let's look at Wave. I know this is like an EV company. It was halted at 9:45, 9:49 a.m. today. Oh, there you go. Pre-market, right? Yeah. Or no, no. Okay. Yeah, I got halted here. Don't know what's happening here, but this is up 25%. Wave. Sofo is up over 90%. Cypher. Are you trading that? I've been shorting the markets. So it's like Mark said, I don't see a lot of things. I don't see like enough reason to just reverse right now, but we'll get there. Hopefully it reverses soon. All right, so this is the halt stuff. I'm going to take that off now, and I'm going to do block trades. What is block trades? This is where a lot of people ask me, do you know where I can like find dark pool money and stuff like that? Like, this is your answer right here. We have it. We got the sauce, okay? Literally every block trade out there. Let's look at a couple here. Qualcomm, chips, okay? And I'm not filtering this by anything. Keep in mind, everything that I just showed you, you can filter it by your watch list. Isn't that awesome? Like having all those features and tools and things like that. So now once you have all these tools, trust me, it makes a difference. Going from nothing, just trying to find stuff on Twitter and like these public boards and chat rooms, it's not a good place to find trade ideas. So this is where you can find some really good trade ideas, have some real concrete data, and then build a strategy to trade that. So block trades, every single block trade is reported here. So Qualcomm, 684,862 shares bought at $154. So I don't know who bought that, but that's let's see. So that was $96 million. Okay. $96 million. 684,000 shares around there times 154. You're looking at $96 million. So somebody spent a lot of money. Okay. Somebody's out there buying Qualcomm like hand over fist. This is a big purchase. I don't know who it was or what it was for. Let's pull up the chart, see what's going on there. So I'm showing you what you like motions, right? Like the motions of how you can go and find trade ideas on Pro. Like if you don't know where to start, I think this is very helpful for you. Okay, so someone bought a lot of Qualcomm. It is hitting a certain, you know what? I wish Mark would be here, dude. Okay, so someone bought a lot, and it looks, I mean, I don't know, but assuming this is the bottom, there it is an important technical level. And it also, I mean, you have a gap here. So who knows if this gap also has to close. If it closes, then, you know, it's going to close. So you're probably going to be looking at a lower move. But that big purchase, $96 million. I don't know. I would have to do a little bit more research, but who knows? It doesn't look that bad. And you could scale in, you know, don't go all in, but you can find trade ideas is what I'm saying, you know, like you can find trade ideas. Let's look at Penn Gaming. Mr. Portnoy, what's going on? What a move, man. $16. Damn, this is what a move. Seriously, Penn Gaming. What a crazy move. And hoping it can start rallying, because this is a pretty good company. All right, so that's how you find the block trades. That covers all the dark pool money, all that kind of stuff, guys. Abdullah is asking, how do we get access to this data? You have to get the school. You get the trading school, and this comes with the trading school, the Benzinga Pro. So, I mean, this is a monster tool. This is a monster tool. There's no, like, I mean, it just has so much, guys. That's why I gotta keep it short, because otherwise it'll take me all day to go over everything here, I swear. Yeah. Let's see what's going on here. Oh, so we have something called Benzinga Exclusives. Benzinga Exclusives is the news that we break. So you guys might know Benzinga by the school or the chat rooms or trade ideas or pro, but we work with other parts of the industry as well, and other sectors. So like whenever a company wants to do a PR, we do the PR for them and we release it here. And in Benzinga Pro, okay, hear me out, you're gonna get that news before it hits other brokerages. Let me tell you why. Because it's just the logistics of it, you know? Like if we release a PR, there is a process for that PR to be channeled and shown in all these other brokerages that you guys use, TD Ameritrade, Webull, Fidelity, you know, whatever it is. So our news will appear there, right? It's because we work with them. We have a working relationship with them. And now, since Benzinga Pro is our platform, obviously there's less red tape, you know, there's less red tape. So we put the PR right away. So there's no delay. So a lot of people, and I've heard even, you know, sometimes it's taken even up to like maybe 20 or 30 minutes for maybe, you know, a piece of news to get picked up by the brokerage itself, right? So maybe we sent the PR 10 minutes ago and it still hasn't been released on their side. So with Pro, that doesn't happen. We release it and we put it immediately. So you can basically, a company does PR, you're going to get that PR here. January 21st, we had the CEO of Plug Power. All right. We had a full interview with this guy, Andrew J. Marsh. Shout out. He's the plug, right? Plug Power. So He went there full interview here, right? Giving you guys insight, a lot of actionable trade. This is real actionable trade ideas and setups. So you have all that. Okay. So if a company does a PR, you get that, right? You get it here in this news feed. I have it filtered by my news feed. You go to the categories, you filter it out there. I have it filtered by news feeds to show you this. But you can filter by a whole lot of different things, even market cap, price, everything I showed you before. And yeah, so basically you're going to filter the news you get. What do I mean? If you want to get news or even Benzinga exclusives, any news that is in this news feed, you can filter it by, flow, market cap, price, volume, all that stuff. And you can and that way you get the news of only things that you want to trade. And that's why it's so important to get to know yourself as a trader, get some education so that you can actually know what kind of trader you are to begin with, right? But if you're just trying to figure it out, you're in the wild mode phase. You're in the, in the Tarzan phase. You have to. There will come a point in every trader's career where they have to acknowledge that if things are not working out and you're still doing the same thing and it's not working out, you have to either stop trading or you do it with people that know how to do it, because it's not for everybody, of course. And if you have, if your P&L is not where you want it to be, then, try the school and give Mark a shot, and promise you in a year, you're going to be a totally different person. There's just no way you don't get anything out of Monday to Wednesday classes. I say Monday to Friday classes. There's just no way you leave that whole thing and not get anything, not learn. It's just, it's impossible. So, all right. So I have this filtered by the exclusives, but I can filter this by my watch list as well. So that means that I'm only going to get the news of my watch list, and I'm only going to focus and see what's going on with the stocks that I care about. I don't want to hear about other companies, because that's what's going to happen often. Traders get super distracted. There's a competition for your attention out there. And, you have to pretty much focus on what matters, right? That's just how we have to be. If you want to be productive, you have to be able to focus on what matters. And what matters is that you trade what you know and what you want to trade. So you can do that. You can filter that here. Let's see a couple more things here really quick. We have this thing called the Squawk Radio. It's literally a radio. We have Mr. Charlie. He's been doing that for a long time. And he's basically doing live callouts, like breaking news live, like Amazon acquires, XYZ company, stock is halted, up 15%, pending news, or something like that. When something happens and it's like actually moving the stock, something's happening in the markets, Charlie's talking about it. So a lot of people that, look, you can listen to this when you're at the gym too, right? You can literally go at the gym, do your workout on treadmill, on your Peloton, and you can just listen to Charlie and just stay up to date on the markets. I know people that, they're at work and they just plug in their Squawk on their phone, and it's playing all day, and they're listening on their headset, or that way they don't have to be looking at the markets, because maybe they're doing something else at the time, right? I know other traders that are super active and they actually use the Squawk for news, because the news in the Squawk, you're getting it audio, right? So that means that you can use your eyeballs to do something else instead of having to like visually have to read the news and things like that. You just get it by audio. So let's see. Good question, Red. It should tell us, right? I wish we would have that kind of data, bro. Okay, so I filtered that. I showed you a couple things. That's Squawk Radio. You can listen it to wherever you want. It's like, I think it's from 7 to 7. Let me find out here really quick. Okay, so I just Googled what time does Benzinga Squawk start. It says from 6 a.m. to 6 p.m. It's not a constant stream, so you'll only hear the most important updates of the day. And that actionable trade ideas fall within that category. breaking news, things like that. Let's see what else. I don't think I miss. I mean, I've gone through a lot. If you click on watch, everything's on the left. So if you're ever asking yourself, where is this, where is that? So simple. Just look to the left. You have tabs on the top so that you can have different workspaces and you can customize them the way that you want, the size that you want, all the stuff like the Windows size, all that. You can have as many workspaces as you want. I have some workspaces that I only use for day trading. I have some workspaces that I only use for a little bit more longer swings, depending on what I'm trying to do that day. This is a huge helper. It's a huge helper. I just can't imagine going back to not having Pro. No, thank you. I'm definitely sticking with my Pro. So, all right. So those are some of the workstations. If you click on the top right, you see there's a question mark. If you click there, you will literally get like videos, tutorials on how to use the tools. So that's pretty awesome. And let's see, this is a little red thing that's jumping. It says new short interest tab. So I'm going to make the announcement here, guys. So we cut a deal now and we actually have the short interest data available now. Okay, let's look at it right here. You see that? Short interest. We just added it. It's super new. So this is like, remember when I was telling you, like we always keep improving and building and trying to make things better for you guys. This is literally what I'm talking about. Okay. And it costs a lot of money to get that data directly. So basically you guys have, we're just, you get it with the special of the school. So you have all the short interest there. I'm looking at Tesla. It says 2.9% of the float is shorted. Short interest 24 mil. Days to cover 0.9. So this is really nice that this, that just got added. So there's also a thing here where you can send some feedback, It would be awesome if. So this is what I'm saying. Like you see that, like it would be awesome if, like you think that's something we can fix or improve or make better, and it's going to help everybody. Then let's do it. I'm all for it, man. I'm all for making this a better experience for you guys. That's literally a super high thing in my list. So. If you have your hand raised, you can just, you can chat, don't worry. You can just ask your question in the chat, Janet and Jacob. So you can ask the questions here. Is it 147 per month continuous and ongoing, or does it? No, as long as you have it, it's going to be ongoing. But if you, cancel it or whatever, you can't get the deal again back because it's only for tonight till midnight. So if you join, good question, Dana. So if you join today, like Patrick did, next month, so the first month is $797. Every month after that is $147. So you keep your Pro, you keep your trading school, the chat room with Mark, all that stuff. So yes, that's correct, Dana. So after the first month, it's $147 every month. And it's always going to stay that way. So, no surprises. And okay, I think I covered almost everything. Well, no, but a lot of things on Pro. So this is Benzinga Pro, guys. This is what I've been trying to show you. These are some of the things that I do for my trading. These are some things that you can do for yourself and you can customize for what you want to do. I just wanted to show you how you can use it. And this is how I use it. Some people use it differently, right? It doesn't mean that you have to do it this way, but I just wanted to give you a clear picture of really the motions when it comes to using these tools. And it's not hard. Don't feel overwhelmed. Sooner or later. Sooner or later, you're going to have to step up your game. It's just that simple. Or you're just going to be washed out of the market. It's really that simple. Either sharpen up get the right tools, you trade with the right community, or the market's going to eat you up alive, and that's it. And that is the reality of the stock market. You need to get educated. You need to. So that's my real, advice. To trade with a community, trade with like actual real traders that actually are putting time and effort to improve, right? Working together, just like Mark Putrino does it. You meet up, you talk about trades, you literally work together like you're trading partners. You can literally say that you learned from a guy that traded with Steve Cohen and Mario Gabelli. There's not a lot of people in this world that could say that. So you have a really good instructor. And what else? So all the recordings are there. Just want to make sure I don't miss anything here. All the recordings are going to be available, folks. If you miss it, the chat rooms are open all day, 24/7. The videos, recordings are available all day. You can watch them anytime. You can watch them during the day. You can watch it live, and you can participate, and you're going to have better results. So all these things, after you do this thing for like 6 months or 5 months or a year, it makes a difference. So we can help you as much as we can, obviously, but the will to learn, the will to succeed, has to come from you. We're giving you all the tools that you will need to do that. So discipline, psychology, there's a lot of things that we can't control for you. So if you keep those things in check, your emotions, then you're going to be better off, of course, in trading. So let's see. Yeah, so we covered everything here, guys. We covered everything in pro, a lot of stuff, really. I'm going back to the trading school. Let's see. All right, so this is the homepage. And in the homepage, all right. In the homepage, you can watch the class live here too, but you won't have the chat. So I wouldn't use this to look at the class when it's live. I only use this homepage when I want to see what's happening tomorrow or the day after, and I just want to see what class is happening. So Monday, March 14th, we have Introduction and Philosophy. So this is the first chapter. If you want to join, this is the best time, straight up, because you're getting chapter 1 on Monday. All right. So pop in there. You're going to enjoy it. I know you're going to love it, because I enjoy it too. Sometimes I go to the class and I'm like, oh, man, I got to work. I just want to be in the chat room all day with Mark in the class all day. So, but it's fun. It's a nice environment. I swear to God, it's a nice environment. You should try it out. It's like night and day. It's you're meeting a whole bunch of different traders. Number one, you're going to meet people, right? You're going to network and get to know people, work together, trade together, right? Like a mini fund, like a little small fund, right? And we're all formulating trade ideas. We're all working together. We're all helping each other out. Mark Putrino, top dog there, giving you all the chart analysis. That's really the most important part, that you have that immediate feedback from Mark. So if you do have a question about a technical issue, like a technical analysis or anything, any pattern, whatever lesson you're looking at, you can ask him right away, and immediate, back and forth, right? I don't know anything else that's similar to this, at least not with somebody at the caliber of Mark Putrino, that's for sure. Let's see. All right, so in the top, if you do want to watch the live class, just click on live and it'll take you straight there. Now there's no class right now, so there's nothing here, but there's a chat room. This is a chat. It's a dedicated chat room, and let's be clear, this chat, the one I'm showing you right now, it's meant to be used for questions about the lesson or the conversation overall that's happening, right? We have a separate chat room for us, a separate chat room for trade ideas. It's not this one. This one is just for the actual class. Like, oh, so Mark, when you say this, you actually mean that, such and such. So you can get that immediate feedback, right? We're in an actual class. Like, this is a legit class, folks. All right. So this is where it would be shown. And if I click on chat, I'll show you where you should go and post your student trade ideas and setups and research. There's a place for that. Okay. I'm just scrolling through this. Okay. Okay. So from what I'm seeing here, Luke and Brandy posted some charts, some, possible trade ideas, some possible opportunities. Someone else posted LEDs. See what LEDs posted. Tesla, Facebook. Okay, so I'm not sure what, it seems like today's tech move was from Tesla, Facebook, NVIDIA. Okay, so I mean, this is what I'm talking about. Like, people are posting things that help you, that are actually beneficial to you. It's a great environment. So yeah, just to recap, if there's any confusions on, like, the structure of what we're doing here with the school, it's $797 the first month, and then the next month it's $147, and it's going to be $147 every month after that. So that's pretty much how it is. It's month to month. All right, so talking about lithium, let's see what they're talking about. Okay, that's nice, right? So you can actually show, so Luke is showing off that he's super good at technical analysis here, right? So that's the thing, guys. Like, you can actually learn all this stuff, and you can, like, in real time get feedback and, make your assessment, make your adjustments. For example, Luke, Luke is, if I think I've spoken with Luke. I know Luke. He's a cool guy. So whenever you're learning something, and let's say you're posting, like, on the chat room, that's such a be like, okay, like, these are the levels that I'm looking at. Do you think that I'm missing a level here that I'm not, taking into account, or I'm trying to buy the stock? Do you think this is a good entry point, or should I wait? Or like, if you want, that daily conversation happens, it's every day. It's every day. So you can do that with the students amongst each other and formulate trade ideas, and you can scheme for trades and setups. And if you want to get Mark's trades, you just go to Mark's chat room. He's got a chat room just for him. And basically all of his setups are going to be there. And I want to show you one thing else here. I'm just scrolling through this stuff pretty fast. All right, so I have some quizzes for you guys as well. We made some quizzes. So when you join the school, you will have these quizzes. There's no test or nothing like that, because I get that question sometimes. You're not going to get, we're not like, we do have the quizzes, but it's not like, you're going to fail and we're going to kick you out, It's not like that. These quizzes are to help you. It's for you to know where you are, and if you be able to find any weakness points and focus on those points, and giving you the tools to do that, right? The Benzinga Pro for the technical analysis, for the charts, for the news, customizing all that stuff, and the school to give you that mentoring, that community, right? That community feeling, that community help. It's just different when you're doing it by yourself, man. It's so different when you do this alone, and then compared to that, actually having a real community of real people, not bots, not fake accounts. It just makes a huge difference. And if you haven't experienced it, then you're missing out, dude. So okay, those are the quizzes. I think I've gone over everything here. So it's been what, 3 hours now, about to be 4 hours. So all right, folks, this has been a great session. I'm going to be clocking out here, guys, but I want to say one last thing here for the people that are here and have been following through and everything. I'm going to give away one VIP ticket, okay? One VIP ticket to Benzinga's event that we have in Vegas, Las Vegas in June. And I'm going to pick the winner from the people that sign up tonight. And I will be announcing the winner at the end of the week, I will be calling this person myself and going over the events and all that stuff. And this person is going to come chill with me, Mark Putrino, and we're going to be there having a great time. You can also go there. There are like you can buy the ticket. The ticket's like $2,000. It's for 2 days. So I'm giving away one very special person, and this person, will be able, they won't have to pay that VIP ticket to go to the event, chill with, and there's a bunch of speakers there, but Mark Putrino will be there, certainly. If you want to meet him in person, that'd be a nice thing, knock a cold beer with him too. So, so yeah, that is something that we're doing just for tonight. So just keep that in mind. If you join, you are going to be entered into this raffle. It's free, I'm giving it away. So, so yeah, everybody that joins today will pretty much be entered into that raffle. Now, the school has a 7-day money back guarantee. So if you don't like it, you get all your money back, no questions, always appreciate the feedback, but nothing needed, right? For to get your money back, just email us or call us, whichever works. And full money back guarantee, right? So 7 days, you try it, you see if it's a good fit, right? I mean, that's why we're giving you 7 days to literally try it and make up your mind so that you can actually experience it, and you'll stay, you'll see. It's just a very nice environment. You're gonna meet some cool people there. Everybody's nice, chirpy, trading, helping each other out. And you learn so much just from the day-to-day conversation. Put aside the class, right? Put aside the 3-4 hours of class. Like your engagement that you're having with everybody there talking, that is learning, like, as you do it with a community. That's why it's good to have classmates. They can help you, right? So it's the same thing. Why would you think it's not that way for this? So the community aspect is great, guys, and I can't emphasize it enough, because the community here, I love it. You guys are super good to me. So it's, the people are awesome here. What can I say? In the chat room, in the school. So everybody has fun and loves it. So guys, I'm going to drop the link in the chat if you want to join. We're only going to have this deal until midnight. If you join today, you're going to get the Benzinga Trading School, the official #1 a cappella Benzinga Trading School #1. Okay. And you're going to get Benzinga Pro too with that. And you're also going to be entered into the raffle, where I'm going to give you, if one person will win, I will give them for free, okay, a $2,000 VIP ticket to our event in Las Vegas. It's in June. It's like June 6th, something like that. So we're doing this just for tonight, guys. So anybody that joins and gets this deal tonight is entered into that raffle. Okay. So one person will be able to go and hang out with Mark, and, meet and network with a whole bunch of like high level, former money managers and fund managers, brokers, all that sort of stuff, so it's going to be a fun event. Like, I'm really pumped. If anybody wants to go to the event or wants more info on the event, like, you can ping me, message me, email me, and I'll try to work something out for you if you do want to take it, but yeah, I'm happy that Mark is going to be there, because we're going to chill with him for a bit there. So I posted the link to join on the chat on Zoom and on Zoom and YouTube. And I'm going to post the contact if anybody has questions on the school on how to join, or if you want to, get a ticket and you want to go to the event and chill with the crew, you can do that too. You can reach out if you have questions about the school. I can help you out. We can email, can call, whatever works. And but yeah, guys, with that in mind, I'm going to go ahead and wrap things up here. So thanks for being here. Shout out, boys and girls. We had a great session today. For those that made it till the end, you guys have the fire, right? The people that really put the time into their education and really their trading career are the people that do the best. The people that work the hardest are the people that do the best. So the people that actually do, go to all these sessions and like they actually engage and participate, those are the people that are going to do the best. So keep that in mind, folks. Shout out to all you guys. All right. So with that, folks, Great to see you guys. Gary, look, I'm a real guy, dude. I say things as they are. That's how I am. So thanks for being here, guys. I appreciate all the love, the energy that you bring here. It's definitely amazing. So we're gonna be wrapping this up. I'm gonna leave the links if you want to join. And money back guarantee, it's month to month, So if you feel you're good and you want to move into something a little bit more advanced or something, call me. I'll hook you up. So, all right, guys, thanks for being here. This is Rodrigo here with Benzinga. So I'm gonna leave the stream running here for a bit because I got to finish some things here on the back. But join, give it a shot, man. And if you have questions, call me, email me. I'll be more than happy to chop it down on the phone with you. Answer any questions or any sort of like if my experience can help you with anything, man, it's just that, make sure you put the education first and don't put it after the account blow up, right? So I blew up my account twice when I started trading, and, I didn't have like the education. There was no trading school, nothing like that. So if there's one thing I would do differently, it would probably be join a community, a focused community that's, focused on trading and education. And that's the school, with somebody like Mark Putrino is just cherry on top of the cake. But folks, great session. We went hard here. So I'll see you guys in the school. Shout out to Patrick for joining. I will see you tomorrow in the class, my friend. And everybody else, thanks for being here. Thanks for joining. We do these sessions to help you guys. And those that do want to take a little bit more, a more active role in managing their money, that's what we're here for, with the trade ideas and things like that. So folks, I'll see you next time. Great being here. And make sure, again, guys, that you give this a shot, okay? Try it out. All right, folks, we'll see you guys next time. Have a good evening and stay safe.